So then securities for lending, mobiles and immobiles. So today I will discuss some the methods how banks are using to obtain securities for mobile and immobile, and the practical difficulties what we see in this entire process. So in between, if you have any questions, please stop me and ask questions, right? Because this is important for you all to know the practical difficulties of securities for lending and mobiles and immobiles, because this will be useful for you even for your examination purpose, right? So whatever the practical problems, definitely I'm going to test your knowledge. Because of that, if you have any practical issues with regard to this particular area, please raise your questions. Now, when you come to definition of mobiles, I explained you this last session as well. Anything that can be moved from one place to another place, and if the item is fixed by nut and bolts, once you remove the nut and bolts, if you can move from one place to another place, we consider that as a mobile. So there can be machines, right, where you can move, but there can be machines which are permanently fixed to the land as well. So the machines which are permanently fixed to the land, you are not in a position to move. Then in such an instance, if you want to create a mortgage, you have to create the mortgage along with the property. So it's your call whether you are going to mortgage only the asset, and if the asset is permanently fixed, be careful, especially sometimes when the machine comes to the imported by the customer. Hardly now today you don't get that much of imports. You have to see whether this, in order for them to work, put it into workable type, whether they have to fix permanent to the building or to the land, right? If so, you have to take the mortgage, property mortgage as well. If it is not the case, you can just only mortgage the mobile item. So before you finance to import the machine, you have to come to a conclusion to say whether you are going to consider this as a movable or a immovable, right? That's important point. But after you bring the machine, there's no point of thinking on that. Before you grant the facility, you should be able to identify whether you are going to execute a mobile mortgage or a immobile mortgage. So the definition is very simple. uh, Move where if the asset that can be moved from one place to another place, we consider it as a movable, right? So the movable property, the common type of movables taken as security are stock in a trade and raw materials, motor vehicles, machinery, and equipment, right? So these are the most common type of securities that we take, right? So the common type of movables taken as security, trade, stock in trade, raw materials, motor vehicles, machinery, and equipment. Bankers can charge. Now, when you come to mobiles, yes, the main heavily dependent type of mobile is the stocks, and we take machineries and motor vehicles. Sometimes you can consider as a fixed charge as well as a floating charge. There are two types of charges that we create: fixed and floating. Fixed charge is created on a fixed asset, right? Non-current assets. And floating charges are created on floating charges. Now, floating charges are items that which are changing with time. Fixed is permanent, right? It can be a property, it can be a building. Floating, it can change, right? So, as a result, uh, stocks we consider as a floating charge, right? Stocks we consider as a movable, therefore we create a floating charge. Now, it can be a situation where I have a motor vehicle, I want to mortgage with your bank. So there's a clear distinct number on that particular motor vehicle. I can create as a fixed charge as well, right? Then it's considered as a fixed asset, and then I will create a fixed charge. But if my business is importing cars and selling, right, every month I import 100 cars and sell. So it's moving. It's some type of a stock, in certain instance, I have to create a floating charge, not a fixed charge, right? In top of that, there can be a work in progress, semi-finished raw materials, semi-finished goods, and finished goods, right? In such an instance, we create a floating charge, but we consider it as a hypothecation load, right? If you have heard the term hypothecation, you will come across, you will know it's a float, it's a process. So any given time, you have to consider the raw material value, semi-finished goods value, finished goods value, and come to a conclusion. What is the total value of this asset, right? So therefore, we consider it as a floating charge, but we use the term hypothecation mortgage. It's on stage, moving mortgage, right? So yeah, once again, whether you are going to consider it as a movable, fixed charge or a floating charge, depend on the asset, what you are going to offer, and the nature of the business as well. So if I have one particular vehicle, I can create a fixed charge and create a mortgage. Or if I have a fleet of assets where every year, every month I'm importing 100 vehicles, it's a part of stocks. Vehicles coming, vehicles moving out, right? So in such an instance, we have to create a floating charge. When there is a work in progress, we create a hypothecation mortgage bond. Any questions on that?
Good afternoon, sir.
Yeah.
Suppose we import a immovable machinery and place in a property which mortgage to another bank and
Property is mortgaged to another bank.
but
Okay.
the suppose the importing the immovable machinery will be mortgaged into
To
our
your
bank.
bank. Okay.
Yes. Is there any restrictions on that? Because the
Definitely, because yeah, there is a restrictions because along with the property that is there in the property will move with that particular mortgage, right? Not only the land, but they have mortgage. Anything belongs to that land will also they have the right to execute take action. So if the machine is permanently fixed to their particular land, and along with the land, when they want to auction, they can your machine will also get auction. So what you have to do is you have to get a no objection letter from that particular bank to say that they have no objection. At the same time, you have to get an undertaking from them. In case of a parate auction, they will not auction this property. If they are auctioning it, they will give you the sales proceed or the whatever the.
Right. Then the bankers can charge these securities in one of the following ways: lien, mortgage, pledge. I will explain what is a lien, what is a mortgage, and what is a pledge. Right. Lien is an hold. Right. You all know that in most of the case, in practical sense, the bankers they create charges or lien over fixed deposit or the cash build up. You hold in certain instances you uh, gold gold loans you create a lien and you hold that, and until the customer pays you are not going to release it. So lien is a whole, it's a legal claim against an asset which is used to secure a loan and which must be paid when the property is sold. In a lien, however, becomes as the owner while the creditor is in actual or the constructive possession of the property. You are the owner, but I am holding it. I'm the bank. But the bank has no right to sell them if the borrower continues to pay installments. So if you're paying your installment, I can't take any action against that, right? I have to hold it. But if you are defaulting only, I will get the right, because we normally, in case of a fixed deposit, we get the right to set off as well. By using the right to set off, we will take action to sell your fixed deposit, uplift and settle it. So most commonly used lien is the fixed deposit or the cash build up. Other than that, organizations, banks, they don't go for a lien type because it's very difficult for hold. Now, for an example, if we are going to hold stocks as a lien, then we have to have warehouse in the bank's name. So it's not practical. That is why we sometimes go for pledge. Recently, you all saw that some sugar were taken by the government to say that they're not distributing to the market, and what I heard was certain banks were affected out of that because those sugar was under pledge facilities. So in the long run, I don't know, now the banks have given the loan, and now the government is taking over. Whether who is going to pay the money is a question, but still that's happening in the market. Right. Then what is a mortgage? A legal agreement that conveys the conditional right of ownership on an asset or property by its owner, the mortgagor, to a lender, the mortgagee, as a security for loan. Now, if you see, I have a property, right? I'm mortgaging that property with the bank. So I'm the mortgagor, right? And I'm obtaining a facility in my name. So I will become the obligor as well as the mortgagor, right? I'm the obligor, mortgagor. But if I'm mortgaging someone else's property in the bank, I will become the obligor or the borrower, and that party will be the mortgagor. So I explained last session, if you mortgage third-party properties, that you can't go for parate auction. As a result, now the banks are not mortgaging third-party property, but the bank go for mortgage where the borrower is the owner of that particular facility. But bank must understand that you will get a mortgagee's right, nothing more than that. You are not getting an absolute ownership. You are getting the mortgagee's right, which is a limited right. In order for you to exercise your mortgagee's right, either you have to follow the parate auction method or you have to go for a mortgage bond action. Even you go for parate auction, now last time I couldn't explain that particular point. You all know the trend is where customers will go for enjoining orders and they will take action to stop your auction. So as a result, sometimes you will not be able to push your auction because they have taken a blocking order or an enjoining order of selling that particular property, right? But still you have to, in such an instance, you have to hold the process until you settle the enjoining order or vacate the enjoining order. Until such time, you can't take any action. Further, if you are not taking the parate auction method, and if you are going for a mortgage bond action, still you will have the mortgagee's right. You are not an absolute owner, right? But the customer can't sell the property without your consent. Customer can't sell the property, or even customer to lease the property, they have to get their consent. So be careful. I have seen in certain instances, now I have a building, I'm going to rent out that property. My rent income is considered by you as my repayment capacity. So my property is mortgaged to you, but I have to create lease agreements with my customers. So at that time, when I want your consent to lease the property, at that time you can't say, no, we are not going to give the consent, right? You have to give the consent because you have taken my lease income as an income for the repayment. So if you can give the consent for my leases subject, which will be subject to your mortgage, you have to be careful, right? And at the same time, if there are certain leases prior to your mortgage, now I have already given one of my ground floor to Singer. They were there for the last 10 years. Now today I'm coming to your bank to obtain a mortgage. Now already the Singer lease is registered and your mortgage will get priority subject to Singer. Now what happens? What is your action? How are you going to handle that situation? As a banker, my property already leased for Singer Sri Lanka for 5 years. Tomorrow I'm going to come to your bank to obtain a facility against the property, and I'm going to create a mortgage. Now you're the banker. How are you going to handle it?
So, do we have to execute the deed of postponement in such scenarios?
Okay. Any other different answers? Yes. Any different answers? Yes. So there are two ways. Either you cancel that particular lease agreement and you sign your mortgage bond and once again create a lease agreement. So sometimes the customers, they are reluctant on that exercise because there is a legal fee and there is a stamp duty involved in that particular process. So as a result, you can go for a postponement, but make sure that you postpone the lease rights subject to your mortgage, right? If you don't execute the postponement agreement properly, you will not be able to get priority. Whole idea of you registration is the going for a postponement is to get rights priority over your mortgage. So as far as anything is, if the lease is getting less priority than your mortgage, any instrument that is signed by the party, that's fine. But if the singer says, no, we can't sign any agreement, so there is no way out, right? Either you can, once again, they might say, okay, if you want to cancel, we can cancel, but customer has to bear the cost or the loss. So be careful if you're handling when that kind of a situation, don't ignore that. If you see there is a already registered lease agreement, either you have to go for a postponement of that particular lease subject to your mortgage, or to cancel that particular lease and register your mortgage and then go for a subsequent lease. So either way, there will be a cost involved in that. The parties must agree on that. Otherwise, you can't, don't just register your mortgage subject to a lease. Maybe sometimes the mortgage is valid, lease will is valid only for 2 months, 3 months, right? Maybe lease may be valid for 2 months or 3 months, but there can be a clause in the lease agreement to say automatically after 5 months it will get valid for another 5 years. So then what are you going to do, right? And if it is a business party, no problem, because they are reputed organizations, they don't their interest will be less, right? But if the property has given to a individual, sometimes vacating those party will be a problem. So those are the practical issues that you have to think in when you are taking decisions with regard to this type of properties. Any questions? Okay. The lender's security interest is recorded in the register of the title documents to make it public information, and is voided then when the loan is repaid in full, right? So when you create the mortgage at the land registry, registering a mortgage, your mortgage, is it a must? Do you have to register a mortgage? Yes. Do you have to register a mortgage? Do you have to register a stock mortgage? Do you have to register a property mortgage? Is it a must? Yes.
Yes, it's a must.
Both, is it a must?
I think yes, sir.
Different answers? Yes. Different answers? Sampath?
To get the priority, we should register the mortgage,
Which
especially
mortgage?
property mortgage.
What about the mobile stock mortgage?
We can't get a priority on that because there is no register in land registry or the registering entry. There is no flow. Only
Yeah.
property, land registry of property. We in one schedule that property there is so we can get the priority on the registration date wise.
Yeah, I agree with you. What about the floating charge, movables? Do you have to register? Registration, is it a must? I agree with you. Property mortgages registration is not a must. If you want to get priority over the subsequent transactions, only you have to register it. Otherwise, other than that, there is no requirement of registry. My question, second question, stock mortgages registration, is it a must? If so, within how many days? Yes, can someone answer? No idea? So the stock mortgages registration is a must within 21 working days in order for you to get validity over that particular stock mortgage. So if you don't register within 21 working days, you are not losing any priority, but this document registration process you have not followed. So as a result, there is a lapse in your registration process. But when you come to property, registration is not a must, but as a practice, we do it because we want to get the priority. Not only that, we use a priority notice and get priority from the day one itself. When you realize, okay, we are going to give a facility, we include a priority notice, and before the execution of the mortgage, we check whether the priority notice is registered, whether you all have got the priority over that. Right? So mortgage is a common instrument that we see around the system. Either way that you can create a property, mobile mortgage, right? Even stock mortgages we create. In addition to that, we have the pledges as well. Section 18 of the Prevention of Frauds Ordinance deals with pledge could procured by customer are kept under bank's control. So here, as I told you, there can be two instances where I'm importing sugar and I have imported 10,000 of 100,000 of kilos, and I have got the financial assistance from you. And when I get the financial assistance, I will purchase, I will import, and those will be kept in a warehouse where dual control will be there. I have a key, you will have a key. So whenever you want the stuff, right, you will have to pay your capital amount. For an example, if you want 50,000 out of 100,000, 50,000 into, if the cost was per kilo 100 rupees, 50,000 into 100 plus the interest. So once you deposit that money in the bank, only I can release 50,000. Right? If you want another 25,000, 25,000 into 100 into interest. Once you deposit that particular amount, only I can release the stuff. Right? So that's how it goes in this import market, importing essentials. But at the same time, local context that we see another method where paddy during the harvest season, customers, they purchase under pledge facilities, and those will be kept in a warehouse. Similarly, if you want 100,000 kilos, 100,000 kilos into, we'll say 100 rupees, we give you and you purchase. And after 4 months, if you want 50,000 into 100 rupees into the interest percentage, we'll have to pay before you release. So the main advantage what we have here is that it's a dual control. Without me, you can't go. Without you, I can't go. But the disadvantage is where in certain instances I have seen long time back, some connected people with these political parties, they have entered through the roof and taken the stuff from the roof. And finally, when the door is open, nothing left in the warehouse. So those are informal type of methods used by customers to avoid banks. As a result, there were a certain set of banks were affected, but finally they had to pay, and they paid that. So those are unexpected type of things we don't expect, right? But it depends on the KYC of the customer, right? If you know the customer, yes. If you know the quality of the customer, you can go for pledge facilities. But if you, my request, if a party is connected with political parties, be careful when you are going for a pledge facility, right? Because they might try to use their political influence and take the stuff out in an unlawful manner, which is not permitted by the process. Okay, under pledge agreement, ownership of the goods remain with the borrower, right? But the possession control is with the bank. You are the owner, but the goods will be kept in the warehouse under dual control. In practical situations, goods are kept in the borrower's warehouse with a key each being held by the borrower and the bank to ensure dual control. So if the bank is having a pledge facility place where they can accommodate, in such an instance, yes, you can keep your stuff in my warehouse and we will have dual control. So recommendation is where you have to ensure that you are getting the correct stuff. If it is sugar, it has to be sugar. If it is rice, it has to be rice. If it is paddy, it has to be paddy. Because there can be instances where they can bring and store things which are not valued, because we as bankers, we can't check each and every bag and see whether this is paddy or sugar. So they can do so many other things. So you have to be a little bit careful. Even drugs, they can bring through sugar and store. How can we do? How do we know? Are we going to check each and every bag and see whether this is drugs or whether this is sugar? Practically, you can't do, no? This is, I'm talking about 100,000 or 500,000 kilos. So gradually they can use these methods to do those types of things as well. So as bankers, that's why I'm always insisting the KYC of the customer, not just lend to achieve your targets. Questions?
So, on the pledge facility, as a bankers, we are keeping the goods into the borrower's warehouse. So, for that purpose, do we have to pay additional cost, additional charges as bankers? Do we have to pay the rental charges for the borrowers because we are using their warehouse, no, sir?
It depends on your agreement with the customer, no? Now, if there is a warehousing facility, now either party can pay 50%, 50%, right? So there's a cost involved in that. So if you are having a, for an example, if your bank is having a pledge store a place, you will charge for that as well. So similarly, if the customer is using, or if the customer agreed, no problem, I will give you the place without any charge. So you have to negotiate on that particular part. If you have the capability of negotiating without paying anything, that's fine. But then that will be included. But you have to have a rental agreement for you to access the premises. So what happened here, when you don't have the rental agreement, if I'm not mistaken, there has to be a rental agreement, especially if it is if it is your building, no problem. If you are keeping this pledge in a third party or customers premises, you have to have an agreement, rental agreement, for you to go to that premises. Otherwise, you can't. I can't come to your home. No, I can come as a visitor, but I don't have any right over that. No, but if I have an agreement, rent agreement to go for your first floor or second floor, then I have some access over that. So therefore, there is a rent agreement signed by the parties for a nominal value between the bank and the owner of the property. Owner can be the bank customer, or owner can be the bank, or owner can be a third party, right? So at the time of negotiating the terms, you have to negotiate that as well. If the customer insists on a payment, yes, or a concession for the interest, you have to consider that as well. Okay. Any questions? Is it clear?
Yes, sir.
Right. Any other questions? Right. Combining movable, immobile securities. So once again, there is a restriction with regard to combining movable and immobile. So when you are designing a set of facilities, you have to design it properly, right? If you can obtain separate securities for each and every facility, that's great, right? Then for an example, I have a housing facility against my property. I have a vehicle mortgage against my vehicle, right? I have another facility against my stocks. So better you, rather than combining these three, right? If you can have different facilities, different loan agreement, different facilities, rather than having collateral securities, it's good for you to, it will help the customer as well, because the customer can, when you give a bunch of facilities, there can be instances where customer can't repay everything at once. So he might say, okay, you release the property, I will sell the property and serve the other two facilities. But when you take as a common, as collateral, sometimes you lose that flexibility, right? So normally what happens, the banks, what they do when a customer is defaulting one facility, they push everything to past due and take legal action. So the concern is where I have only one problem, where I can't pay my vehicle loan, we'll say housing loan, or a vehicle loan, or my business loan. So passing everything into parate, you are putting me into deep trouble. So be careful. My advice is where if you can accommodate me, because finally without your support, I can't run this show. Right? You need to help me. You need to support me. If you can help me, if you can support me only, I'll be able to run this show. So in such an instance, if you have, you will be having little bit flexibility if you have taken different securities for different facilities with different loan agreements, right? So don't try to mix everything. It will be helpful for me to settle also. I can settle and get that asset out and sell it and settle the balance. But if you're going to keep it everything as a block, sometimes I will lose that flexibility and you're not supportive as well. You might say, okay, no, we have to push all your facilities into past due and take action. So finally, I will be affected out of that because there is no flexibility for me in such an instance. Okay, right. So combining movable and immobile securities, when facility was secured by a mortgage over land and additionally secured by a personal guarantee, etc., according to the provisions of the Mortgage Act, the recovery should be through the mortgage land and not through suing the guarantors, etc. So if you have a mortgage, you have to go for the mortgage. You can't go against the personal security. So sometimes I have seen, in order to block the customer, to put mental pressure, sometimes banks prefer to take their personal guarantees as well. So there is no restriction of getting a personal guarantee or any other security as much as you want, but you have a restriction when you go for recovery. You can't use all the assets. So simply you can't combine movables and immovables, but immobile and cash you can combine, but other than that you can't. Those provisions therefore preclude the bank from opting to sue for recovery of any debt secured by a mortgage over land through any other additional or optional security bank may have obtained with the intention of selection at recovery stage. So you might decide, okay, I'm going to select not either property or a land or any other asset at the time of recovery. But you have to decide at the beginning itself. But if you want to put a little bit pressure on the directors through a personal guarantee, that's fine. But you have to understand you can't exercise on all those securities, right? It would be prudent to grant different facilities, isolating the facility secured by mortgage over the land. So if you, as I told you initially, if you can get a separate facility, security for mortgage, security for vehicle, security for other work in progress, then you don't have to combine each other, right? It will be helpful for me. Also, I will say, okay, I will give you continue the vehicle loan, right? I will find a little bit money and I will settle the housing loan, and I want to sell my property. And out of that sales proceed, I will settle the work in progress loan. So similarly, you will have much more flexibility if you have taken separate loan agreements along with separate securities. So normally what happens, bankers, what they do is they straight away say, okay, collateral. property mortgage. Then they go for director's guarantee. So be careful on that exercise, right? Because you need to understand the practical side of the customer as well when you're obtaining security. So try to avoid complicating your business. Right? It doesn't mean that you can't take it. You can take it, but be careful when you're taking that kind of securities. Right. Any questions? Because as I told you, this topic will be useful. Right. No questions. Hypothecation of stocks and book debts. An agreement between the borrower and the lender, whereby the borrower pledges asset as collateral on loan without the lender taking possession of the collateral. In this type of facility, the goods financed in hypothecated to the bank. Hypothecation bond will cover the raw material, work in progress, finished goods and debtors. So there is a work in progress, as I told you. When you have a work in progress, we bankers, what they do is we take a hypothecation loan to cover all the assets, raw material, semi-finished goods, finished goods, and book debtors. So any given time, you have to ensure that the entire value of all these securities should match with your requirement. So in practical sense, now if I want to take a 10 million property stock mortgage, and if I have 20 million stock in the warehouse, as a banker, you will always expect me to maintain 10 million at any given time. So as a businessman, are we going to keep 10 million in the warehouse is a question. Now, if a company like Singer, Abans, okay, they will do that because they have special warehouses where they have large stocks. But a businessman like me, how can I maintain 10 million worth of stocks in a warehouse at any given time is a question. So I'm importing 20 million monthly. I'm selling 20 million during the year. And once again, I'm importing 10 million. So latter part of the month, there will be nothing available in the warehouse. Right? Sometimes it will be difficult for, finally, there won't be anything at the latter part of the transaction until I go for the next import. Right? So that's a practical difficulty that you are faced. You are expecting the customer to maintain the stocks at 10 million at any given point. But in practical sense, I can't keep it because I'm doing a business. So I can't have 10 million worth of stocks at any given time. You know, I know, both of us know, but we are helpless in that entire exercise. Okay. In case of default, the bank has the right of legal action over the goods covered by the hypothecation bond, and the realized proceeds could be used to settle the outstanding facilities. However, it should be noted that despite the bank's right to go for legal action, in practical terms, it is extremely difficult to recover the dues as borrowers tend to dispose the stocks prior to the bank obtaining decree of exercise its rights to recover. So you can exercise your right under hypothecation bond, but you have to go to courts. You have to go to courts and have the normal process and get the judgment and execute your writ. By that time, customer has taken the stuff out, right? Now, assume that there are stocks in a pledge facility, right? Now, the case is dragging for years and years. In such an instance, you can't take the stuff out. Customer can't take the stuff out. Sometimes the goods will get perished. Sometimes the goods will get destroyed, right? When the judgment comes. Or in order for you to safeguard the interest of both parties, you will have to have a security officer there to protect the stuff as well. So looking from a practical perspective, going through a court case and getting the judgment will not help you to protect the stocks which are there in the warehouse. That is why you all have to focus on debt recovery provision. If you focus on debt recovery provision, there will be quick action taken by the bank. Based on your quick action, there will be a clear judgment in a short period where the customer is compelled to settle your outstanding. So the only way out, what I see, is introducing the debt recovery provisions which are available for banks, which are not available for any of the financial institutions other than the banks. And we have to exercise on that and make sure that we protect our interests. Okay. Any questions?
So hypothecation, do we have to register?
Yeah, hypothecation is also a mortgage. So all registration is a must. It's a movable mortgage. We have to register. Okay. Any other questions? No. You must be having a lot of problems with regard to this type of topic because you all are involved in practically, you are involved in this obtaining securities and granting facilities. So that's a core banking business of a banker. So I can't see, I don't think that you don't have problems. Yes. No questions?
So what is the difference between that hypothecation and pledge? Because it is work in progress, because of work in progress.
No. Pledge is something that where you have the dual control. Normal stock mortgage and hypothecation, there's a difference. Our hypothecation where you have the work in progress, right? In a normal stock mortgage, now for an example, I'm importing tables and selling. So then you know there's only one item, the tables. So then you can go for a normal stock mortgage. But if I'm a person who is manufacturing, importing raw materials, manufacturing semi-finished goods and book debts, then in such an instance, you have to cover all these components and you have to go for a hypothecation. So there is a close to a normal stock mortgage and a hypothecation. Pledge is a totally different one. Pledge is a facility where you have dual control and where neither party can go into the premises without the other party. But stock mortgage or the hypothecation, you have the 100% control over the stuff which are there in the warehouse, and as a result, I don't have any control over that. So only thing is that I need to ensure that you maintain stocks, required stock at any given time. Because if you see the percentage wise, property value, you lend 60 to 60% average. Or even if you have, there can be instances if the customer is good, even you can go for 90%. Stocks and machinery, nothing more than 50 to 60. Shares, once again, around 40, right? So unless you maintain the required percentages, sometimes you will not be able to safeguard your interests. Right. Any other questions? Yeah.
So for the facility, what would be the security? Is that the pledge agreement?
Sorry?
For the
For
pledge
what?
facility? For the
Yeah,
pledge
for the
facility?
pledge facility, yeah, there's a pledge document plus you get joint and several guarantees of the parties. So pledge document is there. Pledge mortgage, you can't call that as a pledge mortgage. There's a pledge document. Along with the pledge documents, you get joint and several guarantee of the directors or the partners of that particular firm.
So do
That's
we
the
have to
security
register a pledge document?
pledge document. if I'm not mistaken, is as a movable, yes, you have to register.
Thank
There's
you,
a
sir.
schedule. Yeah, it has to get registered.
So it should be registered in land registry.
Land registry. All movables have to be registered at the land registry. If it is a vehicle mortgage, only the RMB registration is required for the CR book.
In case of that hypothecation, we do not have control over there, no? Because the customer has those work in progress stock.
No control. When you come to stock mortgage, no control. Even whatever the mortgage, you don't have. Only the pledge is where you have a control. Because without your key, they can't go in. But stock mortgages, hypothecation, property mortgages, even the property mortgage, if you have registered properly, your priority, then no problem. If not, still you don't have any control. So those are the practical problems that you have to assess your KYC of your customer and proceed. Now, what is your understanding out of the securities what we take? What is the best security that you know? Yes, can you call any of these securities as best security other than cash? Yes. Kaushalya, what's your view? Are there any best securities?
Immovable properties may be the best security, sir.
That's what you think?
Yes.
Yeah. Any other securities that you think as best securities? Okay. I will prove that property are the not best securities. So finally, from a practical aspect, there is no so-called best security. Best security is your KYC. If you know the customer, right, then you will have a control over his transactions. But if you don't know the customer, you will not have any control over the customer. So the best security for me is KYC. Because security is something subject. It can be there or tomorrow it cannot be there as well. Because 100% control is with the customer. Right? So when the customer is having the security control over him other than the pledge, you don't know what's really happening. So your control over the asset is very minimum. As a result, a customer can sell the asset. So if the customer's KYC is good, if you know him well, he will not do any that kind of an activity for the bank. So that is why I say the KYC is the best security that we can have. Not a mortgage, not a stocks, not a vehicle, because all those are subjective, subject to your mortgages. They can do anything, right?
So KYC is taken to assess that his repayment capacity like that, and we are taking that security or collateral to in case of default only. Sir. That's what I feel like that.
Yeah, the point is where now, why you want to take a security in case of a default, you can fall back on that particular security and sell it and recover. So the problem is where you have a security, but when you want to realize the security is not available. So then what is the purpose of taking a security? Why I say KYC is important? KYC is not an assessment, I would say. It goes beyond that. If you know me well, and if you maintain a bank customer relationship with me, I will not default you. I will not put you into trouble. So as bankers, we have to understand we should not go beyond our limits and maintain relationship with customers. Just to say, okay, requesting the customer to arrange an annual trip, requesting the customer to arrange a dinner or a lunch. I'm not asking you to do that, but you have to have a close relationship with customer transactions, right? For for you to understand what is his current position. So that kind of a relationship is what I'm talking here as KYC, not the form that you're getting filled, because you don't know what is there in the form. It's just like an insurance application. You yes, and you say no. So if you write the wrong yes or no at the wrong place, you are in trouble. So my request is where your relationship with the customer is much more powerful than the security what you're going to get. You will complete all the documents and you will get the security. Yes, fine. But when you go for realization, you will realize security is not available. So what is the purpose of getting a security? Right? But if you maintain a good relationship with me, official relationship, I will never ever default your loan. Simply, I don't want to do that. I don't want to put you into trouble. So that is the relationship I'm talking under this KYC. Right? Now, guilt-edge security. Yes.
Sir, in a situation now, hypothetically thinking, in a situation of a raw material process, like like having a raw materials and having a mortgage over that, in a case of like a natural disaster or something, if the raw materials get destroyed, the entire process is destroyed now. So for that, how, like we have already made the mortgage bond for that. So in that process, how will the loan, like,
Through the insurance, you have to ensure that you mortgage the as a security, right? So
as
in
from
any
the
given
insurance,
time,
we have to cover the
losses. Yes, that is why the insurance is important. You come to stock mortgage, you have to get the full insurance cover assigned to the bank. A vehicle,
Okay.
you have to get full insurance assigned to the bank. Okay.
Okay,
So the only way out is your insurance. If you don't have the proper insurance, once again you are in trouble. You will not be able to recover anything. Okay. Any other questions?
Sir, is
Thank you, sir.
the mortgage or vehicle? Excuse me, sir.
Yes.
Is the mortgage or vehicle is more powerful than a property mortgage in the terms of the liquidity?
Very good question. Now in today's market, what has happened to the markets? Are they prices are increasing or going down?
Prices increase in vehicle prices.
Yeah, but who is going to buy at that time? Price? Is it liquid? Is it liquid today? No, right? And property, is it liquid? So I can't give an exact answer for that. It depends on so many factors. Now it depends on the location of the property, if it is a land or a building, right? If it is we'll say if the property is a reasonable size of a property, not acres and acres. If it is 20 purchase at Colombo 7, or if it is 20 purchase as Candy Annivatta, yes, there is a market for that. Because it's a highly residential area, a reasonable lot where people will buy. Okay. Now, so you can your process of selling that property will be very easy because it's a marketable type of a property and a reasonable size where buyers will be there. But if you have a property, we'll say 5 acres at Colombo 7, it's not easy for you to sell, right? There can be buyers, but people will come and say, okay, we want to block this and we want to sell. Okay, so it will take time. At the same time, the vehicle. Now in current type of a market, everyone is pricing double the value. If you have purchased your vehicle for 10 million, now people say it's 20 million. Now who is going to buy a vehicle for 20 million? If you're buying a house for 20 million, it's fine. But there is a demand for the vehicles because imports have stopped, right? And it depends on the type of the vehicle as well. If it is a marketable type of a vehicle, okay, it can be Toyota, yes. People will prefer to buy Toyota because you can resell it. But if it is a Volvo or Benz, even Volvo and Benz, you have vehicles today. So there is a marketability. If there's a vehicle where it's very difficult to sell, sometimes you will not be able to sell. So it's difficult. You have asked me a question where I can't give a perfect answer, but it depends on the asset. It depends on the affordability of the parties and market demand also. Those factors will decide whether you can sell a vehicle early or property. But from a legal perspective, property process is shorter because you can go for priority auction and acquire the property and you can find a buyer and sell it. But if you are talking about a mortgage, vehicle mortgage, you have to go through the money recovery action and you have to wait for 4-5 years. Right. So process wise, the property process is shorter than the selling a vehicle. Is it clear, Sean?
Thank you, sir.
Okay. Any other questions?
So in case of mortgages, it is though it is not mandatory to register, which banks are registering. There is no bank that is not registering.
All the banks are registering to get priority. That doesn't, if you have failed to register, that doesn't mean their mortgage is not valid. It's valid, but you have not got priority. So any person, if we have done a subsequent transaction over your mortgage, it will get priority. So best would be to make sure your priority is protected, because otherwise you are losing your priority, and in a way that you can't say that your agreement is not valid. But the agreement is valid, but sometimes a customer can deny to say that I have not signed this mortgage. Then you will have to prove whether he has signed and whether this is his signature. So it will have an unnecessary and additional work for you if you fail to register. And also what is important, you need to make sure that it's registered at the correct volume folio. You can get registered at any place, but if it is not registered in the correct volume folio, you have to be very careful. Even your own properties, make sure that those are registered at the correct volume folios. Without your knowledge, sometimes the customer parties will prepare forged documents and they will resell your properties. So be careful. There are instances, a lot of instances where parties have created forged documents and done transactions.
So in that cases, in case of forged documents, if we are unable to prove that the other forged document will get priority, is it the case?
Yeah, the concern is where now you have a land, okay? You have a bare land. So you have not visited for 5 years. So I get hold of this information that you have a land, and I can, if I know the volume folio, I can apply for a certified copy from the land registry. So I have a copy of the deed simply. Right? I can prepare a forged document to make it a real document. So your neighbors don't know who is the owner of this particular land, right? Most of the time that happens, no? Neighbors, they don't know who are the owners of this particular land. And I'm going to, because you have not been there for 5 years, I'm going to prepare a forged document and I'm going to sell. So person who is going to purchase the land will come and visit, and sometimes they might ask from the neighbors who is the owner. They might say, කවුද සර් කෙනෙක් එනවා යනවා එච්චර අපි දන්නේ නැහැ කියලා කිව්වොත් එහෙම. So finally that property will get sold without your knowledge. So then that deed will go and register, right? Then after that party starts construction, only you will realize, okay, my property is sold without your knowledge, right? So at that time, it's going to be a legal battle. So either you have to prove that you are the real owner, that party had to prove that he is the real owner. So this land cases, it's for generations, right? You won't be able to get a judgment within a short period. Land normally for generations. If this generation start, it will be over after 2 generations. That's a fact. So normally we say when you are a lawyer, you have to have a few land cases also, because you can carry forward for the next generation as well, for your son and grandson. Right? Clear?
Okay, okay, sir. Sir, I have some question that in case of pledges, sir, how do we define the stock? That means if you are taking a stock of a shop or something like that, that type of stocks are various. No? So how do we list those and register in the land registry?
No. You now you're talking about the pledge, or you're talking about the mobiles mortgage?
Movables and pledges. Sir.
Yeah. So pledge is different. Don't mix this pledge and the mobiles. Mobiles mortgage is different. They are 100%. If you have taken a vehicle, stock mortgage, you have 100% control over the stocks. You can do anything what you want. You can sell. You can do anything, right? But your question is where, in such an instance, if there are different stocks, okay, we'll say you are importing raw sugar, you are importing rice, you are importing something else, dal. So there is a mix, right? So when you are including in the schedule, you have to include separately. Rice this much, sugar this much, dal this much. So you can have different schedules for each and every stock. So practically the question is where now, so any given time, if I have given 10 million, I have to ensure that all three components at any given time should be 10 million. Now, how do we know whether you are maintaining 10 million is the question, right? If you want, you can make it 0 and say, okay, nothing available, or you can even store more than 10 million. So there's a practical difficulty of identifying whether you are holding 10 million at any given time. But you can include different stocks through attachments, schedules to one mortgage bond. There is no restriction on that. Okay. Clear?
Yes, in case, but it is in case of pledges. No, in case of that movable security, your hypothecation, we don't have that control. No, sir. So in that case, how do we do that?
Still, you don't, other than pledge, you don't have control on any security, right? So that's a fact that you have to understand. You can have schedules, you can say this much of kilos that you are going to mortgage, but at any given time, if the customer is not maintaining, you don't have any control. So it's a security without control, right? You can have a contractual agreement, but finally the security is not there. So what are we going to do? Either we have to negotiate with the customer, or we have to write off. So whether it's hypothecation or a normal stock mortgage, if in case of a hypothecation, there will be different component: raw materials, semi-finished goods, finished goods, and goods. So that is why since we can't identify each and every component, we take the total. Or sometimes the book debts are taken out, raw, semi-finished, we take total and we create the charge. Because it's very difficult for us to understand the exact amount of each and every security. But in case of a stock mortgage, yes, if you have 10 laptops into 200,000, you know, it's 2 million. Right? Then at the same time, you are importing laptops, you are importing fridges, you are importing televisions, you can have separate schedules. So what I understand is what you're trying to ask is, okay, you can't control. Yes, you can't control. Though those are in the schedule, you can't control. So Yeah, but that is why in case of hypothecation, any given time, total value of the asset, when you come to a fixed mortgage, it can be 2-3 items at any given time. The total value of the assets is taken into consideration. Okay.
Yes, in that case, the value is the what is matters, not the type of the security. It is there, no? Is it the case?
Type of the security already we know. We are going to create a floating mortgage, or we are going to create a hypothecation or a floating mortgage. So the type of security is identified. What
No, sir, I
asset you are
mean
going?
the type of goods that we are mortgaging.
No. You have to mention. You agree. I have funded you to import sugar, but you can't import something else. You can't import the salmon, right? Whatever the items, you have to say, okay, I'm importing sugar, rice, and dal. So as far as whether you are going to import 100 kilos of rice and 1000 kilos of sugar and 500 kilos of dal is immaterial. But any given time, the total value of these three components should be the requirement. But if you have agreed to with me to saying that you are importing rice, you can't bring salmon, because it can be against our organization policy. We don't fund for that type of imports. So you can't change the item, but you can change the percentage as a flexible method, right? Not the component. You can't buy get the loan for something else, and you can't utilize for something else. It's just like you are obtaining a loan for a housing, and you are using that to buy a motor vehicle. So from your point of view, whether it's a motor vehicle or a housing is two different. It's immaterial. No, it's material, right? If you are buying, if you have given you the loan to buy a house at Colombo 7, and if you are going to buy a house at Panchikavatta, where there is no market, it matters a lot. So you can't deviate from that. That's the contractual terms. So it's a breach of contract. Okay.
Okay, sir. Thank you.
Excuse me, sir.
Yes.
This is relating
Sir,
to what you mentioned earlier. So, how many years do we consider property under prescriptive rights?
Property mortgage.
Yes.
Yeah, it's a mortgage 10 years from the last payment. Last time's slides, it's there. I discussed that point. In case of an agreement, 6 years. In case of a TOD, 6 years. In case of a POD, 6 years. TOD or casual, it's 3 years. Checks, it's 3 years. So in case of a mortgage, it's 10 years from the last date of payment.
Thank you, sir.
Okay, that's there in the last week's slides. Yes,
sir, in a situation of a the bank gives a loan, a pledged loan to a related party, like within the group, let's say for another company, like the group subsidiary. If it's like the group company related party transactions, does the pledge
bank's related party?
Yeah. Does now in the pledge now there's this dual controlness of the warehouse. Does the same thing happen to the same theory goes for the related party transactions also? Like the pledge dual control is there, the warehouse keys both with the same.
Yes. Related party is where you can't give any beneficial rights to your related party. So the amount, the price you are offering, interest amount should be equivalent to what you are offering to your customers. So other than that, the process is the same. Maybe that your own subsidiary, but even 100%, right? So you can't, you're not supposed to deviate from the principles of that particular method. You have to have, what you're trying to say is it's our 100% subsidiary. Why do we have to have dual control and put all blocks? Yes. because you have to treat that as a customer, though it's your 100% owned subsidiary. Otherwise, you are deviating from the basic norms of that particular pledge facility. So if you have an understanding, if there are any agreement between the parties, because it's your own company, fine. But if the regulator wants, they might say, look here, this for this particular facility, because they consider your subsidiary as another company, customer. Whether you are owning 100% or it's not material for them. So they can include that in their report to say that you have not, though you have given a pledge facility for one of your subsidiaries, ABC Private Limited, but there is no dual control. So that is not advisable. It can be in and name, but finally, if you are giving a type of a loan, you have to follow the required process outlined in that particular facility. Because it's a subsidiary, you can't deviate, but that type of a thing is not considered as a related arm's length type of transactions. But but you have to follow the correct procedure which are there in that particular facility. Okay.
Okay, thank you, sir.
Right. Right. Now, gilt-edged security, this is the name given to stocks of government of Sri Lanka and certain stock guaranteed by government. This merit, their merit as a security lies in the fact that they have the credit backing of the government, that they are not subject to sudden or violent fluctuations in value, and that there is always ready market for them. So if you are purchasing the government securities, we consider it as a gilt-edged securities because the undertaking is given by the government. So your understanding is where, okay, nothing to worry. It's government backed by security. Now, if the government is going to default, that means that's the end of the government as well. So people will lose confidence over that, and you will not be able to raise capital for the government. So that is why we say treasury bill, treasury bonds are gilt-edged security, and normally we don't expect the government to default, right? So those are gilt-edged, means number one security. So current condition, I don't know whether we can still consider that as a gilt-edged security, considering the current economic condition. Whether government is in a position to continue payment is the question, right? Now, effective inspection, this is an important area. How do you all conduct inspections at your banks? Yes. Now we'll say stock mortgage inspection. Can someone tell, Shant, can you just explain what is your method of conducting inspection?
So we usually do stock inspection quarterly basis.
Okay. Is it a spot inspection or is it you inform the customer?
Kind of spot inspection. Sir.
What do you mean by kind of a spot inspection?
Sometimes we inform customer directors that we go to the place and inspect the stocks.
Okay.
Sometimes we don't. We go to the place and we just call customer. We are here and we go for the inspection.
Yeah. What is more effective to your knowledge?
It's spot inspection.
Okay. Right. Udesha, anything that you can add? Do you have any credit knowledge?
Sir, sir, like we have this inspection, like we do it every 6 months, but I have no idea like whether it's a spot or they go, because I don't have direct contact with the credit department. We have this annually, like, the stocks, of course, I don't know whether it's annually or semi-annually, but then like the ones what we do, like I'm in the operation side, so For that, like when you are giving these revolving facilities, of course, we go for a 6-month credit review.
Okay, right. So simply what you're trying to say is your inspection will be done every 6 months.
Yes.
Okay, right. Sampath, anything that you can add?
So usually we are informing the customer and going depending on the customer. If it is a very large customer or something like that, reliable has a large relationship. Depending on relationship, we can decide.
Yeah,
Usually it's
KYC.
quarterly as well. Yes.
Yes. Any different views? Yes. Any different views? Those who are into credit? No? Right. So spot inspection is the best inspection, I would say. And also you all must understand that when you are going for an inspection, you should not inform the customer that you're coming. So normally what happens, bankers practice, you inform the customer you're coming, right? Sometimes the transport is arranged by the customer. Sometimes your lunch is also arranged by the customer. Sometimes a gift is also arranged by the customer, right? Those who have experience, they know. So then what happens, you have bribed halfway. So when you go there, you will not do a good job. So sometimes the customer might say, sir, යන ගමන් එන්නකො මගේ හාල් මෝලට කියලා කියනවා. Right? මගේ office එකට එන්නකො. හොඳ හාල් ටිකක් තියෙනවා කියලා කියනවා. ළඟදි ගත්තේවා කියලා. Am I correct, Shan? එහෙම offers එහෙම ඇවිල්ලා තියෙනවද ඔයගලන්ට?
No, no. නෑ sir, ඇවිල්ලා නෑ.
Okay, right. Sampath, any offers? I'm just joking. Right, fine. So that's naturally that is what happened. Right. So don't be careful on that type of activity. So if you want to do a spot inspection, independent inspection, don't depend on the customer, don't inform him. Right. So, and also when you inform the customer that you're coming, he will bring and store stocks. You can remember there was one of the customers, he was telling me, he was importing this thinner. Thinner, it's just like water. බැංකුවේ එනවා කිව්වම මම thinner barrel ගෙනල්ලා ඉස්සරහෙන් තියනවා. පිටිපස්සේ ඒවා ඔක්කොම වතුර පුරවලා තියෙන්නේ. හරි? Now, as a bank officer, when you go, you can't check each and every barrel, no? So, ඉස්සරහ තියෙන ටික barrel ටික මේවා බලනවා. ඇතුළේ ඒවා මුකුත් බලන්නේ නැහැ. ඒකම මම සමහරලාට lunch එකකුත් offer කරනවා. තියෙන හොඳම hotel එකේ lunch එකකුත් offer කරනවා. So then the inspection purpose is lost. Right? Then it's not going to be a proper inspection. Okay? It will be an inspection, but you have dilute the rules. So whether you are going quarterly, monthly, depends on the type of the risk of the customer as well. But it has to be a spot inspection without informing the customer. That's important. Right? When you come to vehicle mortgages, once again, you have to be a little bit careful when you are purchasing a vehicle. Now, if you're purchasing a vehicle for your personal use, තමන්ගේ පෞද්ගලික පාවිච්චියට මොන හරි vehicle එකක් ගන්නවා නම් ඔයගොල්ලෝ මොනවද බලන්නේ? Now, if you're purchasing a land, you will check at the land registry. පෞද්ගලික පාවිච්චියට vehicle එකක් ගන්නවා නම් check කරනවද කොහයක්වත්? Yes. Check කරනවද කොහයක්වත්? Alison, what is your view? If you're buying a vehicle? You check anywhere?
Not anywhere, but I'll check the CR.
You go through the original CR.
Yeah.
Okay, right. Any different answers on that? Shaminda? I know you are registered under your son's email, which I have also done the same thing. Yes, Chaminda, anything?
No, sir. This is actually my name, Dennis Chamindolobodu.
Yeah.
So they have,
Yes, Dennis.
uh, uh,
Senior Chaminda, right? Yes. When you are purchasing a a vehicle, do you check anywhere?
yes, anyway, CR we are checking, and
Okay.
other than that, we are checking the condition of the vehicle.
That's it.
It's
Yes. So as bankers, you have to be a little bit careful, right? You need to check at the RMB whether this is a registered vehicle. That's important, whether there are any encumbrances, right? Now, if I have created a mortgage over your bank, you will keep the CR book, right? So fine, no problem. But you have created a mortgage and it's registered at the RMB. Only thing, I will not have the original CR, right? Sometime back, I'm not talking right currently. I'm not sure whether that is happening right now, because when the new president came, he put a lot of controls and so many things at the RMB. Sometime back, there were instances where the duplicates were issued for CR book. Right now, for an example, I have mortgaged my vehicle with your bank and I have obtained 5 million. We'll say the vehicle value is 7 million. So you are happy that you think, okay, my CR book is with you. I can't sell this asset. I can sell this asset, right? I can either get a certified copy or a duplicate from RMB. There are ways and means of getting a duplicate, or I can get a true copy. Sometime back, I'm not sure that whether it's happening right now. Sometime back, there were provisions where they issued, I don't know whether it's formal or informal, for 25,000. So I have the CR, okay, and I can sell it to someone else. You just check the CR and you see my name is there, you purchase it. So if you go and check at the RMB, only you will get to know there is an encumbrance over that. So you will get a straightforward question. Okay, if this is mortgage with the X bank, how can you hold the original certificate? So be careful. I know when you want to buy a vehicle, සමහරලාට වාහනේ ගන්න ඔක්කොම සල්ලි ටික අප්ලිෆ්ට් කරලා ණයත් වෙලා ගෙදරටත් ණය වෙලා ණයවන්ටත් ණය වෙලා සමහරලාට ඉන්ෂුරන්ස් එක ගන්න සල්ලි නැහැ. Because we want to get the best vehicle, right? කොහොම හරි ස්ට්‍රෙච් වෙලා අපි ගන්න හොඳම වාහනේ. ඒක ගන්න වාහනේ මේ වගේ දෙයක් වුණොත් මොකද වෙන්නේ? Right? And also there is another method where now condemned vehicles, they improve it and they sell it. Sometimes the condemned vehicles CR they use to register bad vehicles. කැලි දෙකේ වගේ නන pieces වලට කියලා බඩ් කරලා විකුණනවා. So you have to get the actual picture. Now I will tell you an example, but here the buyer took all the actions before purchasing, but still he was stuck. What happened was this particular party, he was an ex-employee of the bank. He purchased a vehicle. Before he purchased the vehicle, he checked the RMB books. RMB books ඔක්කොම clear, no කිසිම ප්‍රශ්නයක් නැහැ. We'll say X Silva is selling, he is going to buy the vehicle from X Silva, no problem. So he purchased the vehicle and he sent for registration. Registration වලට ගියාම මේ vehicle එක registration එක reject කරලා. එතන books වල කියනවා මේක condemn වෙච්ච vehicle එකක් කියලා මේ registration එක reject කරලා. So what has really happened, when the paper advertisement went, the owner has given bribe a person and taken the documents which are relevant to confirm that's a condemned vehicle. So search එක කරාට ඒ documents නෑ, ඒ documents ටික එළියට අරන්. වාහනේ විකුණුවන් පස්සේ documents ටික ආයිත් file එකට ආවා. right? එතකොට ඒ gap එක ඇතුළත vehicle එක ගිහලා හොඳලාට මේ පාටි එක registration වලට ඉක්මනට ආවලා තියෙනවා. යාපු නිසා within a short period they got to know that this is a condemned vehicle and they are not registering. Luckily his brother was attached to army. This is long time backstory I'm telling you. They were able to find the person and they used all their powers and ආයිත් වාහනේ විකුණලා සල්ලි ටික ගත්තා. So another mistake what I see, people they purchase vehicles but they don't go for registration, immediate registration. If possible, go for one day registration itself. Don't drag that. One day registration එක නැතුව vehicle එකක් use කරන්න එපා තමන්ගේ නමට නැතුව. Unless it's a lease vehicle or something. But I will give and explain in what can happen there as well. Right? So there are a lot of, but there was another case. Right? He has purchased a bud vehicle. අවුරුදු දෙකක් විතර යනකොට අර බඩ් කරපු තැනින් මලකඩ කාගෙන යනවලු. Right? So even at that time he knew the person and he was able to resell the vehicle back to him. Like in the vahanයක්, if you're buying a vehicle, purchase it from a known person. Don't purchase it from an unknown person. Owner migrating vehicle at low price. නිකන් දුන්නත් ගන්න එපා migrate කරනවා නම් if you don't know the person. Because these are happening in the market, right? So be careful. There was another case. One of our officers, he purchased a vehicle, but he has not registered this vehicle. Right? Now, for an example, he will assume that he has purchased this vehicle from me. He has not registered, kept the papers open, or he was not. Normally, there's a mentality in Sri Lankans, they don't register. But they say is when you register, your name will come to the CR book. එතකොට අර CR book එකේ ඉන්න ගාන වැඩි වෙනවා. ඕක නිසා සමහර විට your family members, your sister, brother, your cousin's vehicle you are using without registering. Fine, no problem. Right? So here he didn't register. Now I have sold the vehicle. He paid me around, at that time it was around 4 million. So I got the money. I signed the documents and I gave it to him. So from my end, I have done everything and given. He has not registered. I have obtained a loan from your bank and I have defaulted that loan. I lost the case. Fiscal order came and fiscal seized all the assets in my name. එතකොට මොකද වෙන්නේ අර vehicle එකට? ඒකත් මේ list එකේ තියෙනවා මගේ මේ assets list එකේ. Right? He has paid me, I have enjoyed that money. අන්තිමට bank එකේ loan එකට ඒ asset එකත් මේගොල්ලන්ට දෙන්න වුණා. එපාර he filed a case and he was able to maintain his possession, but he had to file a separate case to prove that he gave the money to this party and he is the real owner. After he has to spend around 500,000 to prove his possession. There was another case, right? All these are not created cases, known cases. Same thing happened, right? Then what happened? These people ඒගොල්ලෝ ගිහිල්ලා මේ වාහනේ හැංගුවා. අද වෙනකොත් ඒ වාහනේ විදිනම තියෙනවා because they can't put it into the road, they can't run it. තාම ඒ ගෙදර ඒ වාහනේ තියෙනවා මේ ඔය similar scenario. register කරලා නැහැ, fiscal order එකෙන් මේක seize කරා, මේගොල්ලෝ ගිහිල්ලා වාහනේ හැංගුවා. කිසිම කෙනෙකුට ප්‍රයෝජනයක් නැහැ. So this is the danger. And top of that, when you purchase a vehicle, make sure that you register in your name. When you are selling a vehicle, make sure that you sign the documents and you post your part. Now, for an example, if you're the owner, I'm purchasing your vehicle, I'm not registering, you're the owner. If I'm using that vehicle to transport drugs, what happened? How they hire Allison, who will go to the jail?
Person who has it.
Yes, not the person who is have it, the owner. If you are the owner, you have sold your vehicle to me, I'm using without changing the title. And if something goes wrong, if I use that vehicle for illegal, unethical, illegal activities, transportation of drugs, you are in trouble. පස්සේ කියයි මේකේ අයිතිකාරයා මෙන්න මෙහෙ ඉඳලා හම්බුණා කියලා. Right? Your name will go in papers as well. There you don't know anything at all. So be careful with vehicles. If you are selling, make sure that you don't sign empty papers and give. Fill it, buyer, seller, get a photocopy. You have a form, part of your form, register it on the same day and finish it. If you're buying a vehicle, go for one-day registration, if possible. Right? Go for one-day registration and finish it. So, ඔක්කොම තියෙන weaknesses, problems, ඔක්කොම within a short period you will sort it. Because today I heard that certain vehicles, it's almost double the price. I don't know whether those are moving at that price or not. ගෙයක් ගන්න එක ලාභයි වාහනයක් ගන්නට වැඩිය අද. 20 million, 25 million. Recently I heard that, Benz is less, price is less than the Toyota vehicles. Right? So be careful. This is my personal instructions. If you're buying a vehicle, always purchase from a known person. Don't purchase from an unknown person. Even a land or a vehicle, don't purchase from an unknown person. Don't keep it open. Don't use a vehicle open. Don't allow another person to use open papers. දන්නේ නැතුව සමහර විට විකුණපු වාහනයක කවුරු හරි ඩ්‍රග්ස් දාලා යන්න පුළුවන්. So, and finally, the owner is responsible. No? Yes, any questions on that?
So how do we check with RMB?
You can check with the RMB who is the real owner, whether there are encumbrances. Normally, I don't know whether, I don't think that you can directly check, but there are agents of banks. Each and every agent, bank will have their own agent for registration process. With their support, you can get check who is the owner, whether there are any encumbrances. Not like land registry, I don't think that they will allow, but there are ways and means that you can check and see whether there are any encumbrances, whether so and so is the owner. මං හිතන්නේ මොකක් හරි process එකක් තියෙනවා. I'm not sure about that.
So you
But
can
still
check
you
it
can do
online.
it. Sorry?
You can check it online. I mean,
Ah,
you will not get a description brief. You can get a general idea. So you can වාහන number දුන්න ගමන් just
Okay.
to cross check with the copy of the CR, you will get the chassis number, engine number, and absolute ownership.
So that's more than enough. No?
Yeah, yes, the general things you can get.
Yeah. Are there any encumbrances උත් බලා ගන්න පුළුවන්ද?
Yes, sir. Yes, ඒක වෙනවා.
So that's more than enough. No?
There is app, Android app. We can check that.
අන්න හරි. Android app එකේ තියෙනවා you can online way මේක ගන්න පුළුවන්. මම හිතන්නේ මේ site එකට ගියාම DMT you can check there also.
Right. So the best would be to purchase from a known person, right? Even still, you can check if you have the facility. You can check. Through vehicles, you can do so many things. Anyone right now using an open paper vehicle, or anyone who have sold the vehicle with open papers? But in future, don't do that. Even for your good friend, don't sell it open paper. Say, no, this is my policy. If you want, I can remember when I'm not last year, 2019 latter part, when I want to sell the vehicle, a person came, okay, he agreed everything. So I required the money. So I said, okay, I will give it at a lesser price there. Then all of a sudden, when he came to purchase the vehicle, he was telling, no, I'm not the person who is going to check, someone else. He is one of his assistants. I said, no way. I formed the contract with you. If you want the vehicle, you give this price and say, purchase the vehicle. If not, I'm not going to sell it to him. Mama දන්නේ නැති මනුස්සයට මට මෙහෙම ලැබුණා බෑනේ මම first day දැක්කේ මනුස්සයාව. මේ නෑ සර් එහෙනම් මට open papers. මම කිව්වා නෑ open papers නෑ. හරි? මම දැවත් එක්කනේ කතා කරගත්තේ ඔයාට ඕන නම් විකුණන්න කියලා. Then he agreed and finally he purchased it. ඕක වෙලා තියෙන tax purposes වලට ඒවට මේ they are hiding that. So this is what happened. So be careful. Right? Sometimes they keep a margin and they resell it, but you know him. But when you give the documents to him, he will keep it open and he is going to sell to another person. Then you will have problems.
Yeah, but sir, but now when you sell a vehicle, we normally get a form, no? So we have to send it to RMB, no?
That's right.
The seller.
Yeah.
So if we send it and that person has not registered, then it won't be a problem?
No, but you have to fill that form and give it to him. You don't sign a blank. You have to fill the form and give the documents, completed documents to him, and while sending your copy from this end.
All right.
ඒක වෙන්න ඕනේ. ගොඩක් අය කරන්නේ blank ටික දෙනවා එයාට ඔයාගේ form එක විතරක් fill කරලා යවනවා. So that's not advisable. If you are doing it, you have to make sure that if you are selling to Lalit Perera, you will include Lalit Perera, but those documents it's open. They will send name it a different person. RMB එකේ සමහර දේවල් ඉතින් කරගන්න පුළුවන් නේ. ඒවා ඉතින් ප්‍රශ්නයක් නෑ ඊට පස්සේ. But the point is where if the same person is using it, fine. But if he's giving, it can be he's leasing out. If vehicle is in your name, registered ඕනේ නේ බලන්නේ. ඔයාට ඊට පස්සේ එහෙම කරත් ඔයාට prove කරන්න වෙනවා මේ මම මේක post කරා මේක කරා ඔය ඉතින් practically it's not easy, no? So, but if you have filled the form and given the documents to him, and if you have a copy to say, okay, this is the person, I have filled the form and I have given. උසාවියකට ගියත් නෑ මම මේක ඒගොල්ලෝ එතනින් එහාට alter කරා නම් that's their problem, which is beyond your control. You have a set of forms where you have filled Lalit Perera, and at the same time your document also confirm that you have sold to Lalit Perera. එතනදී ඒගොල්ලෝ ඔයවම කළා ඉරස් කළා මේ අරුණ පෙරර කරලා ගහලා තියෙනවා නම් ඒක that's their problem, no? So don't leave anything blank. Make sure that you complete everything and hand over when you're selling your vehicles. That's very important. ලිකන් තේරුම් නැතු ප්‍රශ්නකට you will be a party for that. So it's not worth. Okay? Any questions?
So once we sold those vehicles, we can check whether they have registered from the website, no? So
I think so, definitely. Is that Amir?
Sir, to get a detailed description, sir, you'll have to pay an addition of something about 150 or 200.
Okay.
But the free details, sir, yes, other me. එකනේ registered owner ගේ නම පෙන්වන්නේ නැහැ අර මේ free දෙන details ටිකේ.
Okay.
So it's just the absolute ownership and then engine number and the vehicle model. I think those only limited details are available, sir.
Even paying 150 and getting that information, it's worth because you are spending millions for a vehicle.
Yes.
150 is nothing today. Right? So still you can get the information. So if you want, you can check whether this is registered under so and so. Finally, if you have done your job, it's their problem, no? Right? So be careful. That's an important point that you have to understand when you are dealing with vehicles, right? And also it has to be full insurance. Now all of a sudden the vehicle prices have increased. Now I heard insurance companies are requesting the vehicle owners to revalue the asset because they are trying to get a mark on that. Day before yesterday, when I'm watching this match, I saw there was an insurance policy introduced by Fairfirst to say premium pay karanna ඕනේ based on the mileage. The mileage එකට තමයි ඒගොල්ලෝ premium එක charge කරන්න කියලා. Then yesterday I gave a call and I checked. They were telling, okay, we have a package 8,000, 10,000, 12,000, 15,000 per year. If you, for an example, if you have taken 8,000 package, if you want, you can top up, it seems. So I was a little bit impressed on this particular policy. Then I asked, how much do you charge for 8,000 for 10 million? Then they quoted a price which is above a normal insurance policy. I'm making you're quoting a higher price and you're marketing through this mileage. So he was telling this and that. So they were talking about they are effective in their service. Then I was told that it's not nice to market your product to say that you are effective in service. But this type of things are happening, but be careful, right? There's no benefit because I checked 10 million for another 2 insurance companies and their prices were 3 companies actually. The prices, 2 company prices were very low than this. So finally, there is no gain for the party. And today, normally you don't use your vehicle. 10,000 kilometers per year is too much, right? If you see last 20 days, 15 days, you have not gone out at all. If you have products, be careful. You have to assess and see whether finally you get the protection is one concern. And they were talking about some conditions apply and so many other things. I thought it's a little bit complicated. I said, no way. Okay, my insurance is good for me. Right. Any questions? Any questions with regard to your assignment?
Yes, in the assignment, do we have to write the what gaps? Why fixing? Why about the company, about the company that we selected, sir?
Yeah. So the concern is where now. If there is any restrictions for you to disclose the name of the company, no problem. You can say a decided company. But if you are disclosing, you can use their website, your annual reports, everything. So if you're not disclosing the name of the company, finally you will not be able to refer any of the public documents. Okay. And if you're using the name of the company, you can refer any of the documents. So that is the only restriction. Other than that, that's your call. Either way, you will not going to lose marks as far as you're in line with the requirements of the question. So your company name is not material for me at all, but the justifications and the gap analysis you are going to find highlight in your assignment is my concern. Okay.
Sir, even though can't we do like this, because this is just I'm asking, if we form hypothetical company, and if we find 5C anyway, you need at least 5 gaps, no sir?
Yeah.
That you asked from us in earlier. So if we mention 5 gaps, then is it sufficient, or it should be is it sufficient, sir, in a hypothetical company?
Yeah, the concern is where when you select a hypothetical type of company, you are not putting any effort. Straight away you create a company and you are going to say these are the gaps, that's it. But if you are selecting a company, and you will have to put a little bit hard work on that if you are selecting an actual company to find gaps. So it's a shortcut method. I'm not going to say you can't do it. I have not discussed that option, but I have no objections of going for that option as well. It's not a problem.
Even though we have selected a hypothetical company, sir, but under the reference page, we're supposed to mention 2-3 companies that we referred.
Yes. So reference has to be there, right? If you're not mentioning the name of the company, or if it is a hypothetical company, there is no reference relevant for that particular company, no? So because it's a hypothetical company, no?
Yeah, but we refer some companies these gaps, no sir?
Yeah,
some
but
3 companies gaps.
so what you're trying to say is you are trying to select 2-3 companies gaps, and you are trying to include into a hypothetical company, and
Yes,
trying
yes.
to say these are the okay. I have no issue, but try to as much as possible try to do select a company and find the gaps, right? So either way, I'm not going to reduce marks, but if you're doing something, then you're not using the shortcut method, you are using the way that you can study something. No, you have to, for you to identify the gaps of a company, you have to study that company. Otherwise, straight away you will say, okay, you will say there is no audit committee, chairman, CEO, two different company individuals, right? You can just highlight certain few points and just write your documents. But if you are doing a real type of a research type of a thing, or assignment, if you can pick a company and identify the gaps, because finally what I want is for you to understand the principles in a selected company, right? I know that you are too smart to go for that approach, but my preference is that, but that doesn't mean that you will get less marks for that. If you can do a study on a real company and highlighting certain important gaps, that would be great. Yes.
Sir, like when I was reading, I came across this situation where in that particular company, they said according to the listed rules. But when I read the listed rules, now in the Codes of Best Practice in Corporate Governance 2017, they specifically says that in a committee, 3 non-executive directors and 2 must be independents among those 3 minimum. In
Committee? Which committee?
Like all audit committee, remuneration committee, it stated.
Okay.
There's a minimum of 3 non-independent.
Desha, you're not
And
clear.
I read the.
Okay.
Now clear?
Now okay.
Hello?
Right.
Okay.
Yeah,
So,
I can hear
now
you.
when reading the. Okay. Now with that, and I also read the listing rules. It also like it was there in that company's annual report, and I checked on the listing rules also. It stated that in audit committee, 2 non-executive directors, and like it's only if it's okay to take 2 if the director board consists of only 2 directors. So that means ultimately anyhow the corporate like the 2017 code is like the must, no?
Not a must actually. It's a
Did you
voluntary
get what
code.
I said?
It's a best practice. A voluntary code. Your selected company. Is it a listed company?
Yeah, it's a listed company.
Only 2
It
directors are
states
there.
that
Only 2 directors are there.
No.
Okay.
No, there are 7 directors in that company. But like I read both the listing rules and the corporate governance code. In corporate governance code, it states that 3 non-executive directors, where 2 should be independent. But in listing rules, it states that 2 independents, non-executive independent directors can be taken minimum only if the director board consists of 2 directors. So that means above that can happen even if the directors are more than that. It can go with 3 or as the minimum.
Yeah. So the requirement is where now best practice is a set of suggestions. Now, if you are a listed entity, you have to follow the listing rules requirements. Most stringent rule you have to follow, right? So if your company have not fulfilled the stringent rule, you can highlight on that. if now definitely if it is a listed entity, they have to have the corporate governance code where they have put it in the box and say whether they have complied or not. No.
Yeah.
Is that, yeah. According to that table, what they have highlighted, what's their
They
argument?
have done. They have highlighted these. They haven't, like, I checked with some other annual reports as well. But they have done is, some companies, they have taken the listed roles plus the corporate governance for the box, and they have ticked that like compliant, all. But in this company, they have taken according to the listed rules, like the corporate governance code according to listed rules.
No problem, because they have taken the, now here what happens now, if you take the banking sector also, we have to fulfill the central bank requirements, but to show that we are complying in the best practice code, we take that table as well. Certain points, when you are ticking the box, the requirements under CBSL and the best practice codes are two different. So in your company, what they have done, they have taken only the mainly the listing rules, not the best practice code. Is that the case?
Yeah.
So that's
Yes,
fine.
yes, that's the case.
That's fine. So you can give a recommendation to say they have selected, what they have done is right? You can't blame on that company because they have fulfilled the minimum requirement, but at the same time you can give a suggestions for an improvement to say, though they have fulfilled the minimum requirement under the best practice, they are expected to have, we'll say three. When you have three, the advantages that you are going to get out of that.
So
Here
I can
there is
get
no
it
gap
as a,
actually. Yeah, you can't
yeah,
highlight that as a gap, but you can highlight as an improvement.
Improvement, no?
Yes, that's also acceptable.
Okay, sir. Thank you.
Okay. Any other question with regard to the assignment? No. Fine.
So I have one. So now when we are going through the company, the listed companies, they have the table with the comparison table. So in these, the whether now there are items where compliance they say no. So are we supposed to take? Can we take the no items and
Yes, if they have not complied, yes, you can. Those are the main straightaway gaps. So there's a requirement they have not fulfilled, so they have not complied. That is a gap that you can highlight.
Right.
Plus, if you feel okay, they have done the requirement, but there is a room for them to improve. Even a further enhancement you can suggest, right? So sometimes when you read the document, you will realize they have ticked the compliant box, but it's not done 100%. In such an instance, you can give some recommendations for further improvements. So my whole idea of this exercise for you to whether you can understand the gaps between this corporate governance, whether you can identify the gaps in corporate governance and how you are going to give recommendation. That's it. Whether you are going to select a hypothetical company, whether listed company is not so material, but if you can select a listed entity with some more references to add value, that's great.
Okay, sir.
Okay. Any other questions?
Sir, we in this case we have to consider about the corporate governance code, not at the listing rules, right?
මෙහෙමයි සමහර ඒවා listing rules වලින් පොඩ්ඩක් කියනවා. listing rules ගොඩක් වෙලාට refer කරන්නේ best practice code එක. එතකොට best practice code එකට ගියාට ප්‍රශ්නයක් නැහැ. හැබැයි සමහර ඒවා ඒගොල්ලෝ කියනවා committees තියෙන්න ඕනේ ඒවා. ඒ වගේ listed now related party committee එක කියන එක listed rules වලින් ඇවිල්ලා තියෙනවා. නමුත් ඔයා select කරපු company එකේ related party committee එකක් නැහැ. ඒක gap එකක්. ඉතින් මට ප්‍රශ්නයක් නැහැ. ඔයා කැමති එකකින් අරගෙන මේවා කරන්න as far as you identify gaps. කොහෙන්ද ගන්න කියන එක මට එච්චර material නැහැ. But I want to see whether you can understand that this has a gap and whether you have a recommendation, why this recommendation is required. එකම ඔයගොල්ලන්ට කිව්ව flexibility එක තියාගන්න. You can select any company. If you don't want to mention the company, you can keep it open. ඒක extension version එකක් විදිහට තමයි අද ඇහුවේ can we go for a hypothetical company? That's not a problem. හැබැයි අර real effort එක එන්නේ අර if when you study a company and identify the gaps and when you highlight it. ඒකයි මගේ point එක. Right?
Okay, sir. Sir, can we have your phone number so we place in front we can contact you?
No 773 690 644. හදිසියෙම ආන්සර් කරේ නැත්නම් මේක ටෙක්ස්ට් එකක් දාලා තියන්න I'm so and so from this class. එහෙම වුණොත් මම හවසට හරි පහුවෙන්ද හරි කෝල් එකක් දෙන්නම්.
Sir, can I have
773 690 644.
Okay, sir. Thank you.
Okay.
Sir, one more question. Is it like a must to have a nomination committee for a company?
Yes. Listed companies, yes. Nomination, remuneration, audit, related parties. Yeah, those 4 committees, yes. Banking sector, in addition to that, risk committee.
Okay, sir. Thank you.
Right. Okay. Now, vehicle mortgages. When you want to mortgage your vehicle, there are certain set of documents that you have to obtain. I will tell you the documents. Just jot down those points. Required documents. You have to get the mortgage bond, vehicle mortgage bond. You have to get a full valuation assigned to the bank. Original CR, consent to mortgage, and loan agreements and other documents. Right now, if you get a question to say what are the documents that you have to you require to obtain for a vehicle mortgage, these are the specific type of documents that you want to get for vehicles. Right. In addition to that, if it is a loan, you have to include the loan agreement, offer letter, standing order, receipt. If it is an overdraft, OD agreement, offer letter. So those are common for any facility depending on the type of the facility. Above that, in case of a vehicle mortgage, you have to get the vehicle mortgage, consent letter, original CR, full insurance assigned to the bank, and plus the valuation. Right. So be careful when you are answering. You have to include, if it is a loan agreement and offer letter, those has to be there. Standing order, receipt. But if it is a overdraft, OD agreement, and the offer letter. Right. So the practical difficulties, practical issues, what we see is the registration process, and you need to register at the RMB, right? There is no so-called period for the registration at the RMB, but there is a requirement for you to register at the Register of Lands within 21 working days, since it's a movable asset, right? And you have to ensure that you pay the stamp duty according to the stamp duty requirements. And you, along with the copy of the mortgage, you have to send the original CR to the Register of Motor Vehicles to get the assignment. So once the assignment is done, you have to make sure that you get back, you get the document back, because most of the instances what I see, sometimes this assignment document is not coming back. When at the time of releasing the document, the bank realize, okay, we have not collected the assignment document, then it's going to be a problem. So be careful, don't wait. You will have to include that in a temper register and record it and get the documents on time. Any questions on vehicle mortgages? Right.
So what do you mean by receipt, sir?
Receipt is to confirm that you have obtained a loan of this amount. I received a sum of 2 million as the loan proceed of this facility. So sometimes your receipt is in between your loan agreement. So sometimes you are not taking a receipt. But normally some banks, they take the receipt as a separate document, confirming that I have received this amount. Okay.
So when we give a grant loan, we usually credit the account, so it is not sufficient to prove that is it need to take. No.
It's sufficient, but as a practice, normally it's allowed. How do I know that you have mistakenly whether you have credited? It can be a situation you have mistakenly credit. I have not received. I can say, look here, this is not the loan that I wanted. Especially when you are paying in installments, where your loan is 10 million and you are paying in 4 installments. So each and every installment you have to have a receipt, because otherwise I can say, look here, I wanted 10 million, now they have credited 250, this is not what I wanted. But if I have an acknowledgement confirming that I have taken 250 each, then on a later day I can't object it, no? But still you can argue that's not a must. But what I'm trying to say is the important documents, right? So you can have your deviations, you can have your own organization policy. Today, the most of the hard copies have shifted to soft copies. So there can be so many changes, but if you want to really prove that you have granted and I have accepted, especially if you want to go for debt recovery provisions, a receipt would be an important document.
Okay,
Okay.
sir.
Right. Stocks and machinery I have taken together because stocks and machinery have a little bit common type of issues. Stocks, the documents that you have to get, in addition to the loan and the OD documents, depending on the facility, you have to get the stock mortgage. Write down a small points. Stock mortgage, stock valuation, inspection, full insurance. So once again, since it's a stock mortgage or a machinery mortgage, you have to register within 21 working days at the land registry. Now, when you come to stock mortgages, the main practical difficulty what I see, now if I have 10 million worth of stocks, right? I say that I have 10 million worth of stocks. I will go to X bank and I will say, okay, I have 10 million worth of stocks. I want a mortgage 5 million. So the margin is 5 million. Okay, they will agree, and they will say, okay, I want to bring all these documents I will have to bring. And when you come to insurance, I will go to the insurance corporation and give you the policy and get 5 million. Then I will go to Y bank and I will say I have 10 million worth of stocks. I want 5 million. So they will give you the same set of documents, and for insurance, I will go to Alliance. I will go to Z Bank and say I want a loan, 5 million. So they will give me the same set of documents. I will go to Janashakti. So what I have done here, I have only 10 million worth of stocks. I have mortgaged to 3 banks and I have got 15 million. So can you control this as a banker? Yes. Can you control this situation? Can you avoid me going to 3 banks and mortgaging the same thing? Shan, any ideas?
No, sir.
Yeah. Anyone who can have any suggestions for that? Can you control that? No, you can't control. So what you can do is you can get an affidavit from me confirming that I have not mortgaged this same stock to any other financial institution. That's it. Because the mortgages are not registered in a particular volume folio, you don't know whether the same stock is mortgaged to another financial institution or not. But if you go on spot inspection, there can be instances where 2 parties 2 banks will come at the same time. Hardly it happen, but it can happen, right? So be careful. There is a trend where the customers are mortgaging the same stock to different banks and getting money. So unless you have a good relationship, KYC, if you don't know the customer, sometimes he might mortgage more than 3 banks and he might create, and all of a sudden he can sell the assets and vanish. So this is a practical problem what we see. To overcome the practical problem, what you can do, you can obtain an affidavit confirming that I have not mortgaged these stocks to any financial institution. That's the only way out, nothing more than that. Right. Any questions? So if you want to change the location of the stocks after execution of a mortgage, if the new location of the stocks are kept within the same land registry area, an addendum to be done for the existing stock mortgage. So you are just changing the address in the same district, no problem. Addendum will do. Address of the insurance cover, which is assigned to the bank, too has to be changed. So the insurance cover will say number 10, Gold Road, Ratmalane. Now they have changed to number 12, number Gold Road, Mortua. So the insurance policy and the addendum has to be included. Formal letter to be obtained from the customer confirming the relocation of the stock. So I'm the customer, I have to give a letter to say that I have changed the location, but within the same district. If the new location is beyond the land registry area, where the existing stock mortgage is registered, you have to execute a fresh stock mortgage, get the same registered in the land registry of new area. So if I'm taking my stock from Colombo to Kalutara, it's a new area, then you have to execute a fresh mortgage bond for that particular area, right? You can't use the same mortgage bond in case if I'm shifting from one land registry to another land registry. Okay, so that's important.
So
Excuse me,
sir.
Yeah.
Okay, Shan. Go on.
sir. This is a practical question. Suppose a company imports 10 diversify goods, and the customer mortgage 5 out of that to our bank. In a scenario like this, suppose there are restrictions in importing several goods which have mortgage to our bank. Okay. Then suppose our stock mortgage is 50 million, then their stock is 30 million. How can we add another commodity to our mortgage bond to cover our exposure?
Yeah, you can include an addendum and include a new set of items for that particular mortgage. That's the only way out.
So right? How is the procedure, sir?
It's a procedure. It's an agreement between you and the bank, you and the customer. Customer will have to make a request to say, okay, earlier I wanted to import X item. Now X item is a restrictive item. Now I can, since under the current restrictions, I can import Y. Please include Y into this particular mortgage bond. So then you will have to, your lawyers will have to prepare an addendum. Addendum is an addition to the existing mortgage, including the new product and getting registered at the land registry. That is the only way out.
Thank you, sir.
There's no other way.
Thank you, sir.
Yes. Any other questions? Someone else want to ask a question? No? Right. Prevent customers from mortgaging same stock to different banks. I told you there is a trend where the same customer mortgaging it to different banks. Obtain an affidavit from the customer confirming that the said stock is not mortgaged to any other financial institution other than the bank. Now, periodical inspection of security, I told you that you have to go for spot inspection. If it is high risk, monthly, quarterly by relationship or the branch manager or above. If it is high risk type of a customer, better you go monthly or quarterly. A medium risk, quarterly, half yearly by a middle level officer. Low risk, half yearly, yearly by a middle level officer. So depending on the risk of the customer, right? You have to ensure that it can be the customer, it can be the goods as well. But you have to have your own inspection process by depending on the risk, right? A senior officer, junior or middle officer can do that. But the most important point, it has to be a spot inspection, not an informed inspection. Right, life insurance procedure. When it comes to life insurance, we go for assignment of life insurance. So procedure of obtaining life insurance, the policy must be in force and all premiums should be paid up to date, right? So all premiums, you have to make sure that you have paid up to date. If beneficiary is appointed, then what happens here? If you have any beneficiaries in a policy, right? You have to, if the beneficiary is a minor, you have to remove the minor from the policy. If the beneficiary is a major, no problem. You can make that beneficiary a co-own borrower of that particular facility. Now, for an example, your spouse is a beneficiary. No problem. You can request the party to make her or him as a co-borrower. But if you have included your child who is less than 18 years as a co-beneficiary, since minor, you can't take action against minors, you have to request him to remove him from the policy, right? So life insurance is good, but you have to ensure life insurance is based on uberime fide, and if the insurer has not given the correct information at the time of opening the insurance, there'll be a the insurance company can decline. So today I heard an issue where when you are taking life insurance policy, be careful, you have to fill the form. There was an incident where one gentleman has signed and given, and though he has disclosed his issues or the big problems that he has, they have not entered simply to market the product, and that person has died after 4 years, and they had not paid a single cent. So you all have to be very careful on that aspect. Insurance people might market, right, unethically, since they want the policy, but they will not do anything thereafter. So you have to have a control over that. Even for your clients, just inform. Insurance is insurance, but when you go for a claim, you will realize the practical difficulties that you are facing to get that claim. So at that time, sometimes the policyholder is not living as well. So then the survivors or the legal heirs will have to suffer an entire process. At that time, sometimes they will not pay the policy amount as well. So be careful of that. Registration with insured. Every assignment taken by the bank must be registered with the relevant insurance company as soon as possible and not less than 7 days after the execution of the assignment. So once you assign the policy, it has to be registered at the insurance company to make sure that your rights are protected. So what normally happens if something happens to that policy holder, if you have given a loan, you have to fill certain forms and send it to the insurance company. Insurance company will straight away, they will give you the surrender value where you can recover your outstanding and pay back the balance to the survivors of that particular policy. That is how it goes in case of an insurance policy. Even an advance against surrender value is not 100% safe. There is one disability which may impair a life policy for as a bank as assignee is concerned. Since the contract is insurance, as I told you, it's a prima fide. If the policyholder gives wrong information at the beginning, sometimes the insurance company might say, no, we are not going to pay a single cent. So that is the only area that we see a weakness when we see in these policies. Other than that, there is no risk at all when you come to life policies. So here I have included policy must be free from any onerous or other conditions adverse to the bank interest. Just go through these points. I'm not going to cover. War risk, aviation conditions, suicide clause. So they have included those clauses. So when you come to the insurance, they will protect themselves 100%. So they are marketing it to say that we are getting the protection. We don't get the much protection. They are protected from the claims. So it's a huge problem when you come to insurance companies. If you are taking a policy, go for a reputed company where you have some kind of a connection as well. Right? If you finally, when you go for a claim, it depends on the real relationship. It's unfortunate to say that, but if you don't have any relationship, you will not be able to get anything from them. So be careful on that. Okay. Any questions on life policies? So in practical sense, life policies are very effective, but if the party has not divulged the correct information, if they have not given the true picture, sometimes the bank will not get a single cent. Other than that, there is no risk at all when you come to insurance policies. Right, shares, what type of shares accepted? So here you can lend against shares. So the recommendation is where you lend against listed shares, because listed shares you can sell it at any moment. If it is private or public unlisted shares, you will not be able to sell quickly or convert into cash. So the best would be you lend against listed shares for you to convert that into cash in short period. Normally percentage of advance, it's around recommended is 40% to 50%, because the market are so volatile, they're changing. Vanikin Corporation came to the market at 100 rupees, but when it crashed, it went zero, right? So even the 40% or 50% is not adequate. So you have to have a continuous valuation on shares if you have lend against shares to ensure that your lending is safe. So we will have additional work over that if you have lend against shares, because continuous valuation, monthly or quarterly or whatever, you have to value and see whether you have the minimum control over that. Documents to be obtained, it depends on, normally those are CDS shares listed. So either you can have a custodian type of a relationship where you can create a tripartite agreement. Now if you take a private company share certificate, it's a private entity, those are not listed. Instrument of mortgage, so you have to create a mortgage, charge on security from the shareholders, right, and power of attorney. So simply the shareholder will give a power of attorney to the bank managing director. Wherever you want, you can sell the shares. So problem here is where private companies or unlisted companies, you have to find a person who have interest over these shares. Because if it is a listed entity, you can trade in the market. You don't have the opportunity when you are mortgaging private or unlisted company shares. But these are the documents that you have to accept in case of if you are lending against private company shares or unlisted company shares. But if you are mortgaging against listed company shares, you need to create a collateral account, right? And where your bank, customer, and your stockbroker will open a tripartite agreement, and instrument of mortgage, charge on security from the shareholder, power of attorney. Here what happens, whatever the shares in the CDS will be released to this collateral account of the stockbroker, and without the bank's instructions, the shares will not be sold by your broker. The customer don't have free access to sell. because those shares are kept under the tri-party agreement with your stockbroker. Most of the banks, they have their own stockbrokers, so they hand over those shares with the consent of the customer with the power of attorney to their stockbroker. When the bank wants, by using the power of attorney, they can request, give instructions to the stockbroker to sell the shares. So this is the mechanism when you come to listed entity. But lending against shares is not so advisable in a fluctuating type of a market. Anything can happen any moment. No one knows what will happen, right? So I don't know whether it's advisable to invest and lend against shares in today's context, right? Any questions? No.
So power of attorney is mandatory that shares.
It's a mandatory requirement to get a power of attorney, because the point is where now without how now bank wants to sell, customer says no. So then how can we sell? But if you have given me a power of attorney, I can use the power of attorney and sell the shares. But in case of a death of a customer, the power of attorney will come to an end. It's important. Your customer has given a power of attorney, but after the death, power of attorney is no more valid. Don't exercise any transaction after the death, because the power of attorney is not effective. Principal is no more there, right? So agent can't do anything because the principal is not there. So as a banker, you are the agent. I'm giving my authority, I'm no more there. So you can't exercise. But power of attorney is a must. Otherwise, you don't have any authority to sell. In case of a dispute, I will object. But you can use the power of attorney because you have given the consent to me to sell the shares. So then, by using the power of attorney, I can sell the shares.
Do we have to inform the stockbrokers also with regard?
Yeah, through stock. If it is a listed entity, through the stockbrokers only you have to sell. You can sell. Unlisted, you have to find a person who have some interest over these shares. Otherwise, you will not be able to sell. No.
When we accept them as this as a security, do we have to inform the stockbrokers?
Sorry, question is not so clear.
When we accept these shares as securities, do we have to inform the stockbrokers that we have accepted it?
You don't have to inform the stockbrokers, but you have to inform the company secretary to create the charge. Charge on security is where you inform the company secretary that we have mortgaged these shares in the bank. All future dividends should come to them. So that's the whole purpose of getting the charge on security, right? So you are informing the company secretary that these shares are we have mortgage, so please send all the fees. So if it is a listed entity, automatically tri-party agreement is there. So CDS stockbroker will get hold of this CDS shares in your account. So we have to inform definitely, and then only they will release those shares into the tri-party agreement contract to the account. Otherwise, the customer can freely trade those shares. No, you're putting a ceiling, you're putting a block into transferring it to a separate account, custodian account. It's called the custodian type of an account. So I can mortgage any shares which are in the CDS account, but I have to transfer it to a custodian account, which is under my bank. So if you go through the stock CDS, you will see there are certain shares in my custodian account with the bank. So those custodian shares you can't trade. But only at the request of the bank, by using the power of attorney, custodian shares can be sold. That's it. Okay, clear?
Is that we have to inform that the company secretary of the shareholder. So that means that
share company, yes.
Oh,
if it is HNB, you have to inform the HNB company secretary with
okay,
regard to the dividend, charge on security.
Okay, sir.
Okay, right.
Excuse me, sir. Could you explain the term share certificate?
Share certificate is in physical form. Now, prior to this transferring straight away to the share CDS accounts, earlier companies issued share certificates, right? Haven't you seen share certificates?
No, sir, I have not came across.
Okay, it's just like a sorry, I don't have a certificate for you to show. It's a printed document giving your name, address, NIC number, and giving a distinctive number to say that now from 001 to 0000 shares issued to so and so, right? So the share certificate is in your name. So if you see, we have all shareholders. Some shareholders, they have framed this share certificate, initial share certificate, even they have not lodged on the CDS. And it's just like almost similar like a certificate what you get for a sport meet, right? Share certificate. It contains the company name and your name, your NIC number, how many shares owned by you, what is the distinctive number from 001 to 100, and and signed by 2 directors or director and secretary. That's a share certificate. Private companies, since they can't list their shares, they will have to issue share certificates. But listed entities, today you can't issue share certificates. It's scriptless type of shares. Yes.
Thank you, sir.
Yes. Okay. Right. Now, guarantees, there are personal guarantees. All persons who have agreed to become guarantors should actually sign the guarantee. Otherwise, those who have already signed will not be bound. So I told you, if they have issue of a letter to say all directors personal guarantee, if there are 5 directors, if 4 have signed, even the parties who have signed the guarantee will not be responsible for their liability. So be careful when you're taking signatures. You have to ensure that you get the correct, all the party signatures where you have typed or issued in the offer letter. So sometimes the banks, they say, no, the parties who have signed, they are proportionately, they are liable. They're not proportionately liable, right? Even the parties who have signed will not be liable for that. In case of National Provincial Bank, the guarantee was on its face intended to be joint and several guarantee by 4 guarantors. 3 out of the 4 signed the guarantee, but the 4th did not sign. It was held that the 3 who had signed were not liable to the bank of the guarantee. So this is a decided case, right? Very clearly, 4 was there, 3 has signed. Court decided, no, it's not a valid document as a guarantee. So make sure that you get the correct information and all parties have to sign. So all parties signing on the same day is not required. Even guarantors can sign in different dates, but before granting the facility, you have to get the signatures, right? That's important. Sometimes after granting the facility, you get the guarantee. What's the purpose? Before signing, before granting the facility, all should sign. But it's not mandatory to sign all the parties on the same day. That is why, and when you're signing on the last page, there is a signature, NIC number, and you get the date. But all should sign prior to granting the facility. And it's your responsibility to explain the guarantor what is his liability. If it is 10 million, you have to say, okay, 10 million and 1-to-1 interest. So maximum you can go interest is another 10 million, nothing more than that. So if it is joint and several, 2 will be liable for 10 million plus interest. So if your interest is 12 million and if the capital is 8 million, you can't claim 12 million. Maximum ceiling for interest will be 10 million against the amount granted, not the outstanding. If you have granted 10 million, maximum 10 million interest, though the capital has reduced for 8 million, there is no, you can even claim 10 million as interest. So it's your responsibility to inform the customer the maximum liability. At the same time, don't reuse a guarantee, personal guarantee for another facility. If I have signed as a guarantor for A's facility 100,000, once that facility is over, the guarantee is no more valid. You have to get another guarantee if you want to make me personally responsible for that amount. But if I have given a consent letter confirming, okay, no problem, the guarantee bond which I have signed on such and such a day is valid, even for the subsequent facility, there is a cover. But my recommendation, if you are using the same guarantor for a further facility, obtain a fresh facility, obtain a fresh guarantee from the guarantor. Any questions?
Sir, is there any rule that customer is not liable to pay beyond that capital outstanding amount?
Customer is not liable.
Yes, that you said now.
Yeah, so guarantor is maximum claim. What you can claim from the guarantor is guarantee is 1-to-1. If I have signed the guarantee for 10 million, maximum interest that you can claim is 10 million interest. You can't go beyond that. Now, if it is a loan, definitely it has to go down. No, capital will go down, then substantially the interest will go down. Unless the bank have slept and all of a sudden they realize now the interest is more than the capital, then there is issue. Either you have not recovered any interest portion, you have covered only the capital portion, then your interest will be higher than the capital. If you are going in a sequential manner, installment, equated, capital and interest, definitely interest cannot exceed your capital granted amount. Right, so the maximum, but still the maximum of 1-to-1 is acceptable. So if you have given a 10 million loan, maximum interest you can recover is 10 million, not anything more than that. That's the law. Okay.
Okay, sir.
Right. Liability of the guarantor. Yes.
So if a guarantor want to remove from the guarantee, and he requests, I am willing to remove from this guarantee, and we have granted revolving facilities package.
Yeah.
Sometimes STL's package. How could we handle that situation?
So you have to request the borrower to bring a new fresh guarantor and obtain a fresh guarantee bond. That's the only way out. Now, if it is a joint and several guarantee, A and A, B, C has signed, C says I want to move out, then you have to inform A and B, and you have to request the borrower to bring D, then you have to get a fresh guarantee from A, B, and D. So it has to be by a way of a request, and you have to issue an offer letter, inclusion of the new guarantor, and all parties A, B, and D has to sign a fresh guarantee bond. So it's possible, but other guarantors also must agree. When you are releasing a guarantor, please make sure that he may be the main player in that particular guarantee bond, right? So if you are releasing that person, you will lose the control over that particular guarantee claim as well. So be careful, but it's possible.
Also, sir, we should hold our granting facilities for that, I think, because guarantor says I want to remove from this guarantee. So we are granting STS package. So we can't go through for continue the
yeah. So within a short period, you have to change the security, no? So for an example, I'm a guarantor today. I'm going to inform you, look here, from tomorrow I'm going to move out. So until you complete the new documentation process, you can't, because your security is unsecured, no? Right. So at the same time, you have to inform me, look here, tomorrow I can't do, but we will request that particular person to bring another guarantor. Once the document is signed, we will remove you. Right. So if there's a dispute, we have to be very careful and don't grant further facilities after that. Once the complaint comes or once the request comes, if you feel that there is a dispute among the parties, don't give further facilities. So if there is no dispute, if the voluntary are moving out as a director, I have signed, a new person is coming, almost equal to my capacity. So it's a matter of getting the documentation within 1 or 2 days and you can continue. So if it is unsecured, if there's a dispute, don't proceed. Clear?
Okay, thank you, sir. Sir, anytime a guarantor can exit from his liability as a guarantor, if he wish.
Only thing any guarantor can request, but as a bank, we can't just release people. So then you have to inform, look here, we can't just release you, but we want another guarantor. So then the guarantor will have to push the borrower to bring another guarantor into the documentation process. So I have entered into a contract with you. I want to withdraw. That's it. So I have to give notice and I have to withdraw. Overnight, it can't happen. So from a banker's perspective, we have to request the borrower to find another guarantor equivalent to me. Otherwise, what will happen? I will take the facility, and tomorrow I will say I can't continue that. That's not possible, because once my liability will be over, after the new guarantor comes, and if he is undertaking, now what happens here? Guarantor, the new person should be willing to get the all total outstanding. That is why I request you to take a fresh guarantee bond, and automatically he will be liable for that. Don't continue a guarantee bond, which if you have changed, don't take a personal guarantee from the new person and keep the previous guarantee where I'm not there. So best would be to take a joint and several guarantee of all the 3 parties, including the new person, excluding the previous person. So I can make a request tomorrow, but whether it's practically whether you can change me or not is your call. But you can't just ignore, right? I'm pushing you. I'm pushing my customer as well. You have to push your customer and bring a new guarantor, and I can move out.
So that means that until that bank accept that we can accept you as not included in the guarantee, only he is released from his liability, no? If not, he's not.
Yes, but you can't drag, right? You can't just say, okay, I know that you have made a request, but this person is not bringing. You have to take steps as well. You have to push the customer to say, look here, there's a dispute. This person wants to move out. Please bring us a new guarantor, unless we are not going to give any short-term facilities. So since he wants a short-term facility, because you all are pushing him, he will bring another customer. He will bring another guarantor. Okay. Right. Liability of guarantor and extent of the liability. Persons eligible to guarantee. There is little or no difference between person's capacity to borrow and that the person capacity to guarantee. So while checking my capacity as a borrower, if I'm signing as a guarantor, you have to check the repayment capability of the guarantor as well. It's a must. Why a personal guarantee for third-party security? When you are taking a third-party security, it can be a fixed deposit. I'm borrowing against a third party's fixed deposit. You have to get a personal guarantee from the third party, because then you are creating a liability, his liability as a guarantor as well. So there is a must for taking third-party security, especially a fixed deposit. You have to get a personal guarantee of that party, because otherwise that party will say, I don't know anything, that I have opened a fixed deposit. Now they have kept this fixed deposit for a facility, I without my knowledge. But if that person is signing a personal guarantee, then he is responsible for that as well. Okay. If the bank is obtaining 2 guarantees from a customer, must state the exact liability on each guarantee. Right, you have to inform the customer, this is your liability over this guarantee, this is your liability over this guarantee. Once the guarantor pay the outstanding in full, he gets the right to sue the borrower unless he has waived off such rights. Subrogation, once the guarantor pays the outstanding in full, you get the right to sue. Now, guarantor has paid the full amount, then he can take action against the borrower. That's called the subrogation, right? Now I'm a guarantor. I have guaranteed excess facility. Since excess not paid, I can pay you. When you will confirm me issuing a letter, so say as a guarantor, I have paid this amount. I can use that letter to take action against the borrower of your company. Now, this discharge of guarantees, discharge by payment. This is the point that you were asking. Discharge by release of principal debtor. If I want, okay, if I feel, okay, you're not required, I can release you. Discharge by material variation of principal's contract. Now, if there's a change in contract, I can release you. Discharge by material variation of contract of guarantee. If there's a change in the guarantee bond, I can release you. Discharge by change in the legal position of parties. So if the legal position of the parties have changed, once again, you can change. Now, earlier it was ex-company partners where one director is moving out, and in such an instance, you can change the discharge the guarantors. Now, at the request of the customer, also you can do it. Guarantor also you can do it. Request of the customer, request of the guarantor, and those are the instances where you can remove a guarantor from or discharge a guarantor's liability. Now, when you come to power of attorney, it's very important, right? Using of power of attorneys. You have to, sorry. Yeah, power of attorney, when you receive a power of attorney, I told you last time as well, you have to ensure that you see the original power of attorney, and you check the power of attorney, and you have to get a confirmation that there's authority in that power of attorney for my request. And if you're happy, yes, you have to get a affidavit from the principal confirming that he has given this power of attorney to so and so, and I'm the power of attorney holder. That affidavit should come from the principal, and this affidavit has to be updated. Now, how frequently you have to get affidavit is a question. Now, all of a sudden, if I'm coming today as a power of attorney holder and I'm withdrawing 10,000 rupees, after 2 years, I'm trying to withdraw the entirety, full amount. There's 5 million. So at that point, once again, as a prudent banker, you have to get a power of affidavit from the principal to get a confirmation whether still I'm the power of attorney holder for this particular facility. So dealing with power of attorneys, you have to be very careful, right? Because through power of attorneys, you can do so many things. I can create a forged document, right? I can get hold of information from one of you all, a dormant account or account which is not functioning. I can create a forged document and I can give it to your bank to say I'm a power of attorney of so and so. So if you have not got the proper affidavit from the principal, right, I can get those information as well. I can prepare a affidavit on behalf of the principal, and I'm the one who is going to give that information to you. You are happy with your documentation, you think, okay, everything was signed by principal, and you execute, and I'm taking the money and I'm finished. I can prepare a forged identity and forged set of documents. You will have a set of documents which are based on forged documents. Finally, when the principal comes, you are responsible. So be careful. You have to ensure that you are dealing with the principal and you are dealing with the power of attorney where the principal have given authority to me. So dealing with power of attorneys, you have to be extra careful. Don't proceed with power of attorneys if you don't have the required, if you don't feel that this is a genuine document. Okay, right. So most of the time what I see that practically people will come, so okay, the principal has gone abroad, right, and before he went, he gave this power of attorney. Now I want to do these transactions. So it's the principal responsibility to give the instructions before he leave. If he has not done, it's not your problem, no. So let him draw a power of attorney from that tent where he is right now and register it and proceed. Now, if you know that son and father, mother and daughter, if you know the parties, no problem. But if the document comes from a third party, there is no relationship, even you also don't know, and that person has gone abroad for a long time back, right? There is a substantial amount in his account. So with the information of internal parties, of the internal bankers, people will prepare forged documents and try to withdraw. So be careful on that. Right. Company borrowings, what documents required? So first important thing is that you have to have a resolution confirming that the board of directors have taken a decision to borrow from your bank. Format of the resolution, it has to be original letterhead, not a photocopy. And clearly it has to state what is your requirement. On such and such day, the board of directors of XY Private Limited resolved to obtain a term loan of 10 million from ABC Bank, signed by 2 directors or director and secretary. Common seal is not a must. What is object clause? As I told you, previously companies had memorandum and articles of association. In the memorandum, you get the object clause. Article is there for your internal functions of the company, shareholders' right, directors' duties, payment, conducting meetings. But with the Companies Act 7 of 2007, the objective clause was moved out. Now there is no objects. If you want to form, once you form a company, any business ethical, you can do it, right? But if you want to have an object, you can include that object in the articles of association. Then at the beginning of the articles, you will say objects of the company and you can include. But today, the bankers, they have a wrong assumption. They think because the memorandum is no more there, the company doesn't have objects. And as a result, they don't take this intra-vires certificate. Intra-vires certificate is a confirmation from the company directors confirming that they have not violated the objects of the company. So unfortunately, some bankers, they think now the memorandum is no more there. There is no requirement of getting the intra-vires certificate. Intra-vires means you are playing within the authority. Ultra-vires means you have exceeded the authority. So each and every director must give a confirmation to the bank, a personal level confirmation that they have not exceeded their objects. So be careful on that aspect. If you feel there is an set of objects in the articles, since there is no memorandum today, you have to get an intra-vires certificate confirming that they have not violated, exceed the objects. Application of the common seal, you need to ensure that.
Excuse me, sir.
Yes.
Excuse me, sir. What if
Yes.
the company has exceeded their objectives? What are the measures we have to take, sir?
So before you grant the facility, you have to ensure that they have not exceeded the objects. After that, what you have to say, you get hold of that, what are the exceeded objects, and you have to somehow push the company to settle the outstanding. That's the only way out. Litigation will be the only option, no? So rather than disturbing your customer, better you inform, look here, there is a problem. Please settle our dues. It's a informal type of arrangement thereafter. So you can't take them to courts, right? If they're willing to settle. If you go to courts, then it's going to be a court battle. Clear?
Thank you, sir. Yes.
Yeah. Application of common seal. Now, this is called the embossed seal. Sometimes the bankers think, okay, now the common seal is no more required. No, it's a requirement. According to the articles, you have to check whether the common seal is a must. You place the common seal or the embossed seal beside 2 directors or director and secretary will sign. They are witnessing the common seal, right? What they do is they are witnessing. The common seal is the signature of the company. So please make sure if you are not taking the common seal or the embossed seal, there are provisions in their articles to say that they are not using the common seal. If there are no provisions, or if there's no provisions in the articles, you have to have the common seal. And if the articles are silent, you have to get a resolution from the board of directors confirming that they are not using the common seal for any of the signatures of the company. Okay. Interviewers, I explained to you how to increase the stated capital. Once again, in certain instances, sometimes you might, I explained this point. I will briefly explain that once again. If you feel the shareholders' contribution is less, you can request the company to increase the stated capital, and you have to file the Form 6 and the Form 6 confirmation certified copy by the Register of Companies will confirm that they have increased the stated capital of the company. So after that, it will be their contribution towards the company is higher than the previous. Now, procedural rules to follow when obtaining signatures. This is very important. If it is continuous pages, every 4th page you have to get the signature. If it is single page, on the 2nd page you have to get the signature. 2 sides, 2nd page. If it is 4 pages on the 4th page. But more prudently, sometimes banks every 2nd page they take it, because once this margin is removed, it will become 2 pieces. So best would be every 2nd page. And also, in case of a sole proprietorship or a partnership, rubber stamp is not a must for signatories. If the signatory can say under what capacity he has signed, A. Silva, partner, ABC Enterprises. B. Silva, partner, ABC Enterprises. C. Silva, partner, ABC Enterprises. But better to have a rubber stamp. And if there are 20 partners in a partnership, all 20 partners should sign for documentation. But when you come to issuing of checks, 20 partners can pass a resolution to say any one partner or any 2 partners, then any 2 partners can sign. So requirement of common seal, you have to check the articles and see whether correct parties who should authorize to sign the on behalf of a company. Accordingly, you have to get the signatures. And also, do you have a practice of if the signature is placed in Sinhala, do you have a practice of including a clause to say Yeta karma terum gena assam karami, or you have a stamp to that effect if the customer is signing in Sinhala? Anyone who is having that practice? Yes. The customer is signing in Sinhala, do you have a seal to say Yeta karma terum gena assam kara? In practice එකක් තියෙනවද කාගේ හරි? නුවණි? Yes. Are you all sleeping? No? You all don't have that practice?
We do, sir. We do.
Yeah. So why you take that, why do you place that signature for Sinhala signatures?
Mainly because the documents are generated in English now. So
Okay.
to make sure that the customer is well aware of the terms and conditions, so that in a latter day that he won't come and tell that නෑ මට තේරුන්නේ නෑ ඉංග්‍රීසියෙන් තිබුණේ ඒක නිසා මම දැනන් හිටියේ නෑ. To avoid that kind of situations, we one thing, we make him aware. We read and make him aware. Okay, these are the conditions, and then we get his consent.
Okay. Now, if my signature is a star, right? My signature is a star. Then what happens to your argument?
Signature, yeah, a
It's a
signature can be anything, right? As long
Yeah.
as
Okay.
if he's in the mandate, if he's signing and saying this is my signature,
Yeah.
then I don't see any issue in that.
Yeah.
But the thing is,
So
it can be duplicated by anyone. That's the issue.
Yeah, that's my problem.
Yes.
It's what you're trying to say is it's a weak signature, then you want an indemnity. That's fine. I can give an indemnity, I can give everything. Now, your concern is that when the customer is signing in Sinhala, you place this seal. Now, for an example, if this is Chandrika Bandarnaka Kumaratunga is signing in Sinhala, okay? If she is coming to your bank to obtain a facility, what is your position? She went to Oxford College, UK. She has degrees from Oxford. Are you going to have the seal?
No, sir, we cannot do that.
Yeah. Right. So what is required? I know some banks are using it. What is required is rather than depending on a seal, whatever the language, English, Sinhala, or Tamil, or a star, you request the customer to write on his own handwriting, I agree with the above terms and conditions, and place his signature. ඉහත කරුණු තේරුම් ගෙන අස්සම් කළවි. තොර ඉංග්‍රීසියෙන්ද සිංහලෙන්ද කියන එක වැදගත් නෑ, but you have to prove whether I understood the information which is given in that document. Then you are safe, because I had to write on my own handwriting, not a seal. Then what are you going to have for a person who is signing in Tamil? What are you going to do if the person is signing with a symbol? You don't have an answer for that. So the best, my suggestion, throw that particular seal, inform, you have to get the approval as well. Just inform, raise this concern. Better you request me to write on my own handwriting. If the document is English, but if I'm going to say then whether I can read it or not, I'm giving an undertaking. I understood. People who sign in English, you can't come to assumption to say that they know English. People who sign in Sinhala, you can't come to an assumption to say that they can't understand English. Right? So be careful when you are using that kind of a seal. You have to be, finally you have to safeguard the interest of the bank. Not because you are signing in Sinhala. Sometimes your chairman may be signing in Sinhala. And if chairman is coming to obtain a facility, can you ask him to sign? No, you can't. So be careful on that, right? Pushpa Kumara, your mic is on mute. Right, thank you. Okay, and I have covered any questions with regard to signatures. If the person can't sign, it's a left thumb impression and a mark, right? That's the only way out. Sometimes best would be if a person is there in an account where they can't sign. Make sure that you read the rest of the slides. I'm not going to discuss. I will have to discuss this one. If a person is there who is weak to sign, place a signature. You request them to make the joint account, then you're safe, right? It can be a person who can't hear, who can't see, right? We had a problem where when the customer was open, or at the time he opened the account, he can see, but after some time, due to some problem, he was not well and he can't see now. So we had a hard time of convincing him. And what we did was, in front of a witness, his own witness, we explained and we allowed him to withdraw all the money. So finally, we got the required letters from him. His own witness explained to him, and we got the signatures. And finally, because he was a very demanding type of a customer, so we had to handle very carefully, because we should not discriminate, because finally he was in good shape sometime back. After a few years only it has happened, so we had to give due respect, and we did everything what he wanted simply, right? So that's when you fall onto that level only you will realize the practical issues. So we understood well, and we sent our own officers without disturbing him, and we requested him to bring one of his relates, and we explained him in front of him, and two parties were witness, and finally we gave all the money what he wanted. So we have to be very careful. Okay, any questions with regard to mobiles before I go for immobile?
So in case of power of attorney, is it must to register? No.
No, I told that the local power of attorney registration is not a must, but as a practice, all the bankers, they insist on this registration at the Registrar General's office. But if it is a foreign power of attorney, registration is a must.
Okay, sir.
Right. Now, when you come to property, that your argument is where the property, immobile property is better than mobile property. Now, once again, if you are purchasing a land, I'm talking about your personally, if you are purchasing a land, you have to be a little bit careful on that exercise once again. Moment. Yeah. Okay. Before that, I just want to. Yeah. Important points to note that you go through that particular. I'm not going to touch. If I have time only, I'm going to touch. Right. Now, when you're purchasing a land, once again, you have to try to purchase it from a known person. Right. Once, why I say there are a lot of forged deeds, documents around the system, around the field. Right. There was one particular case where it happened to a legal officer, unfortunately, of a bank. She purchased a land somewhere around Mount Lavinia area. At that time, the purchase price were around 400,000. She got around 325,000. So it was a cheap type of a price. So she purchased, and then she started construction. So at that time only, then the real owner heard that there's a construction over his property, and he came, and there was objection. Finally, she has to give the land, and the seller was missing. And since she has obtained a loan from the bank, she has to pay the loan as well. So the danger is where, if you, now for an example, you have a land, right? You have a land. So you are going to say, you're going to sell. So I'm going to come to your bank. I'm going to come to your land, and I'm happy with the land. And I will request, okay, I'm going to buy from X bank. I want the copies of the title deed. I want a copy of the plan, and I want a letter confirming the selling price. So these are the 3 documents that I will request from you. I will say, local authority, you give me the consent letter. I will get the local authority on behalf of you. So bankers, what you request, copy of the deed, copy of the plan, selling price confirm letter, and the local authority. So local authority, I undertook, you don't have to worry. I will get this document done. Okay. Then I will go to X bank, and I will submit all my information. Right. And you're happy. And one of your officers will go and do an inspection. And seller says, yes. So and so came. He collected all this information. And this is the land. So everything is fine. You process the loan. Right. On the date of signing, since I have the copies of the document, I will prepare a forged set of documents. Forged deed, forged plan. Local authority, I can get it from straight away from the local authority I have given to you. And a forged identity to show that the along with me, a real vendor is coming. We'll say Silva, Aruna Silva. I'm preparing a forged identity in the name of Aruna Silva, and with another person. On the date of the signing, I will come to your bank. So Aruna Silva don't know anything. Based on your requirements, you will say you have to go to this regional office. The regional law is so and so. I will go to the regional office. Regional law is so and so. I will meet, and I will request my person to give the original deed and plan. You're happy, and you will release the pay order. Now all these things happen without the knowledge of the real party. So then he will say, I want this money today itself. Can I open this account? can I open an account and deposit this money? We'll say 10 million. Okay, you think, okay, it's a cross-selling as well. You'll have certain targets also, no? So you help him, or your regional office will send him to the branch, and he will credit his money and he will withdraw everything and vanish. From tomorrow, he will not be able to get my information, or from tomorrow, my facility will be defaulted, and you have a mortgage, but it's not a real mortgage. So can we control? How can we control this? Are we in a position to control or not? These are real examples which has happened, right? Banks are receiving forged documents of other parties. Now, in this example, I'm not going to construct, I'm defaulting the bank. I got the money, both of us shared, we vanished. That's it. Right? There was another case in Nigambo, it's a huge land, and they have created a title transactions without the party's knowledge. And they have mortgaged to a bank. Property value was around 200 million, and they have taken 50 million from the bank. Bank officers were very happy because the value of the property is 200, and this party is wanted only 50 million. So why not give 50 million? And some political parties were involved in that particular process. Then they have created this change for a long period, right? Then they defaulted. When the bank went for Parate auction, when they posted the auction banner, only the real owner got to know this property is already sold or mortgaged to a bank. But they have done continuously, they have created title and registered. And at a certain point, after planning it well, after 3 years, they have mortgaged to a bank, and bank was happy, value is there, and it's a bare land because no one was there actually to show the land. So the bank officers have gone, they have done the valuation, they were happy, they have given the facility, default. So be careful when you're purchasing a land, bare land, without knowing the party, don't purchase. And at the same time, if you have bare lands, unattended, there'll be a lot of owners who have prepared titles and sold. So either way, if you're purchasing, especially if you're purchasing, try to purchase from a known person rather than purchasing from an unknown person. Any questions? No questions? Right. So the banker's perspective, when you're obtaining a property mortgage, you have to check the title. Depending on the bank, sometimes you will last for 30 years, sometimes you will last for 20 years, sometimes you will last for 18 years, 25 years. So if you're happy with the title, you will last all the documents. As I told you, from the inception itself, go for the priority notice, register the priority notice, and make sure that you get the rights, and don't wait till the last moment. As soon as possible, you have to register your mortgage bond, and if there's a deed of transfer, request the parties to register as soon as possible. But if you have a priority notice, no problem, no issue at all. You need to get the original deeds, plans, everything, and the registered mortgage bond, and secure your property. And also, when you're mortgaging a property, make sure that you have to have a approved plan. If it is a large land divided into small pieces, a subdivision, for each and every land there has to be an access. Access is important, right? If there is no access, then you will have problem if you go for a resale. And also, if you don't purchase any land without proper access, if your land is adjoining to a municipal council road or urban council road, no problem. Then they automatically you will get the right of way. But if your land is inside a big land where small roads are there, when you are writing the transfer deed, make sure that all the blocks, small roads are in your deed as a right of way. Otherwise, you can't use it, right? Because it's important. Without the right of way, you will not be able to sell your property to anyone else in the long run. So be careful on that particular aspect as well, right? And at the same time, local authority certificates, you have to be carefully, you have to take local authority certificates and make sure that you whether there is a street line or a building line. If there's no street line, no problem. If there's a building line, the building line will be measured from the middle point of the road towards your land. So if it is a 15 feet road, wide road, and if the building line says 10 feet, that means middle of the road to the end of your boundary will be 7.5, and you have to leave 2.5 feet and start the construction. Either building line or street line, it's the same process. If you can't do any constructions within the building or street line purview, so your construction should start thereafter. Normally there are 273 square feet for a perch. So if a customer says I have 3,000 square feet, my building ground floor, then you can come to an assumption how many perches are there, right? And also when you start construction, front you have to leave for the building or the street line. Back behind you have to leave another 7 or 10 feet from the boundary wall. Two parallel sides you can have blind walls, that's not a problem, but you have to see the municipal council requirements, and based on that only you have to fulfill the requirements. So that is how it goes when you come to property mortgages. And yes, and also if a property is transferred from a power of attorney, it has to be a special power of attorney. Don't execute a property transfer through a general power of attorney. Make sure that the real party has given the real power of attorney to sell this property. That's important, right? Any questions? Yes, any questions? No?
Sir, can you explain that straight line again? A straight line, how that happens?
Yeah. Now now we say the width of the road is 15 feet, and if the straight line says 10 feet straight line, you have to measure starting this from the midpoint of the road. So midpoint will be 7.5 feet. So 7.5 to your edge of your land, it's already 7.5. Then you have to leave 2.5 because the straight line is 10 feet. So you have to release 2.5 from your land and start construction. So whatever the street or building line, start from the midpoint of the road. If it is the 20 feet road, if they say 30 feet straight line, midpoint of 20 is 10 feet to your land, then you have to leave another 10 feet and start construction. So the point is where if there's a road widening, and if you have done any construction within the straight line purview, and it will damage the entire building. So be careful when you are valuing properties, existing properties. If there's a straight line, you have to measure it and see whether they have done any constructions within the straight line or the building line purview. If they have done, then the value of that particular building is no more there. If one of the biggest column is, if they have done, put up a column or a column within that particular straight line or the building line, then there is no value in that particular building. So you have to be a little bit careful on that exercise.
So when that local authority gives that certificate, do they check that building plan? When they approve that, they do check, no? That
they do check. They do check because the surveyor who is preparing the plan must show and indicate to say that he has excluded this. When you go for the local authority, they will check whether your construction is within the street line or the building line. If you are taking approval, if you are getting approval. So the point is where if you are constructing without the approval, be careful. There are certain areas that you outstation. Sometimes you don't have to get approval from the local authority for construction. That's not a problem. If not, you have to ensure that you get the approval as well. Especially after construction, you have to get the certificate of conformity or COC. If you have not done the construction in line with the approved plan, they will not issue the COC. So COC is not a must, but if you, as bankers, we insist. But if you are constructing a house on your own without any bank facilities, COC is a must, is not a must. So when you start constructing, there will be deviations. You think, okay, this wall should shifted to another 3 feet and you want to add another roof. So practical sense, sometimes there can be deviations. If it is not a material type of deviation, no problem. But when you come to local authority, they will say, no, you have not constructed according to the approvals, and they might say you're not going to get the COC. So COC is not a must when you come to, if a bank is asking a COC, then there's a problem. Other than that, it's not a problem. Okay, any questions?
So in case of post documents, we can check through the title only, no? There's no...
No, you can't check.
Title,
it's a forged document. Sorry?
Through title also we cannot check that.
No, you can't check because I'm bringing forged document as originals. If you go take these documents to the land registry, you will see Aruna Pereira is the owner. So the document says the real owner is also Aruna Pereira. Since I forgot to inform that I got the signature in the letter, so I will somehow request that person to place the signature. The unfortunate point is where the person who went for inspection will not be in front of the signatory as a witness. So the best would be to avoid that. Always the person officer who is going for inspection should be there when the documents are signed. So he has to sign as a witness because then he knows the real person who met at the inspection. So if your process is where there is a separate team who go for inspection, and on the date of signing there, that person is not there, officer is not there, straight away the customer will go to the lawyer and they will get the advantage out of that. So only way out, only solution, the officer who went for inspection should sign as a witness for the transaction. Then there's no problem.
But even he comes also, that can happen.
No, but now if you have seen the person, you have to have an idea whether you saw him, no? Now, basically, when you go for inspection, if you can get hold of his NIC and get a photograph, then you have the photograph of the person who met. But when you see the person who is coming is a totally different person from the person who saw at the inspection, you can compare the physical person and your NIC, no? Yeah, that's the idea. That's the whole idea. So you have to have justification, not like those days. You have to have controls. You have to think with a little bit more common sense, and maybe these rules are not there in your organization policy or procedure, but it's a prudent banking, no? And if he can't remember the person, once again, whether he is there is immaterial, because if you don't have adequate information to justify whether the same person is there. So you might think, okay, similar to this person. That is why you have to have a document to say, okay, you have at least a copy of the NIC, but it has to be once again updated one. There was one particular incident where an NIC was given. When you look at the NIC and the person who came, both are the same. But unfortunately, the banker forgot to see the NIC number. So 30-year girl came with a 65-year-old NIC. So her mother looks the same when she was at 30. So this daughter has used mother's NIC and opened an account, The officer has checked the NIC and the person who is in front, both the same. But he did not use his common sense to see how old is she is. So simply that girl has opened an account by using a 65-year-old NIC. Right? This is what happened. So you have to go beyond and make sure that you protect your interest. Today, no one knows what will happen tomorrow. People will find new avenues and new ways to get the advantage of the weaknesses of the bankers. So always you have to be one step ahead. That's why I told you the KYC is the most important thing. If you know the KYC, if you know him in and out, you'll have a better control. Any questions?
So, suppose if we grant a facility under power of attorney, and loan become defaulted after that, so can we sue the attorney holder, or anyway we can sue the original principal, but simultaneously can we sue the attorney holder, sir?
No, you can't. If a power of attorney is coming to obtain a facility, you have to give the facility into the name of the principal, and assumption is where the principal is enjoying the facilities, and therefore the principal is responsible. You can't take action against the attorney. Now the practical difficulty, I can come to a bank by using my spouse's power of attorney, and I can request you to mortgage one of her properties and give a facility. Then you will credit the facility onto her name. By using the same power of attorney, I can withdraw the money. So that is why you have to have a specific, if you're mortgaging a power of attorney through a power of attorney, a principal's property, you have to have the affidavit confirmed by the principal that I have appointed so and so for the following transaction, and he is authorized, or he or she is authorized to mortgage my asset at number 10 Call Road, Ratmanani. And the documentation you have to coordinate with that party. You should not allow me to coordinate, because finally I can prepare 4 set of documents and bring it to you. So unless you coordinate directly with them. So simply answering your questions, no, you can't take action against the power of attorney. So for a fraud type of a transaction, you can, but at that time you won't be able to get hold of me. I'm a forged person. I'm preparing 4 set of documents and producing. I will get the advantage. I'm managed. Okay.
So what are the instances that power of attorney become null and void?
Death of a party, cancellation. Those are the main 2 instances. Cancellation and preparing a fresh power of attorney. 3 instances.
Preparing fresh power of attorney means the existing one automatically
yes.
will
The problem
be
is
null and void.
Problem is where you don't know whether the party has issued a fresh power of attorney. I have given a power of attorney today. Tomorrow I can give a power of attorney to Y. So as a banker, sometimes your power of attorney, you will go to a bank and you do the transaction. That is why at the point of entrance, we request the principal's affidavit. So if tomorrow my power of attorney will be used, since though the principal's responsibility to inform the bank. So principal also have a responsibility. If I have given a power of attorney to X bank, to act you as a power of attorney holder, if I'm going to cancel it, I have to inform the X bank as well. I have cancelled this. But anyway, practically these things are not happening. That is why if you go for a further transaction, you need to get an update from the principal to see whether this power of attorney is valid.
Anyway, it's principal's duty, no, sir. The bankers
are beyond. You can't say that. You have done a transaction last year. In between, I have cancelled. Today, another person is bringing the same, trying to use the same power of attorney and trying to do a transaction. So there's a clear gap between the original power of attorney data and today. You have a responsibility to contact the principal and ask a question whether this power of attorney is still in force or not. So either way, both parties will have the responsibility. You can't just pass the ball to the customer principal, because maybe the customer has posted, or your people have not filed properly, or customer has given it to the agent knowingly that he has not given the power of attorney to your bank. So that is why you have to directly deal with the principal and get another confirmation, because today I'm coming to withdraw all the money. So once again, it depends on the transaction as well. If it is no big liability where you can absorb, fine. But all of a sudden, if mortgaging a property, withdrawing the full amount in the account, then you will have more responsibility towards that, because you are responsible for your customer, not for me. Your customer is the principal. You can say, okay, it's my duty to inform you. I also have a responsibility, but that doesn't mean that you can 100% say, because if I'm going to prove, no, I have executed this power of attorney and I have posted, I have the registered fourth article, you all have put somewhere, misplaced that document. So then how are we going to find it? So you have to be extra careful when you're dealing with power of attorneys. That's the point that you have to understand. Yes, any other questions?
But if the transaction has happened very frequently, then meantime the power of the original principal has changes power of attorney, and so in that case, the bankers, as a bankers, that we can pass the ball to him, no, sir?
No,
Because
the point is where now it's prudent banking, right? Always banker must act without negligence and with their care. Now I know the pattern. Now, for an example, rather than withdrawing everything at once, gradually I'm withdrawing 10,000, 10,000, 10,000, 10,000. So as a prudent banker, as an experienced banker, you should be able to understand what is this pattern. And if you feel this is suspicious, you have to start your job and get a fresh document, because I know that if I'm going to withdraw everything, you will feel that it's a suspicious transaction. To avoid that, I'm gradually taking, it's a pattern. So you should be, I know what I'm trying to say is not easy for you to do it, but that should be the practice of a banker, without negligence and with due care and prudent banking. So when you see there is a mechanism of withdrawal, you have to feel suspicious, no? So at that point, you can pass the ball to the principal to say that you have not done your job. If I have given now, that is why we say frequently you have to update the affidavit. How frequently is silent? How frequently what you have updating this affidavit, it's your call. If you feel suspicious, you have to get the document. So both parties will have the responsibility. What I want to say is you have to be extra careful, because through power of attorney, you can do anything. Finally, when you are in middle of a battle, it's going to be a legal battle, no? You have to give evidence, you have to internal inquiries will be there, right? Sometimes your people might think that you also got an advantage out of that. You don't know how when the things are fine, it's fine. When the thing goes bad, there'll be a lot of auditors around you and you have to write explanation, no? No one will at that time say you have done a good job, your customer service is good. Overnight, you will thrown out by the company. So that's reality, no? So we have to take precautionary actions as much as possible. Okay, anything else? So we have come to the end. So I'll be taking another one session, not immediately, after 4 weeks to discuss on money laundering and the compliance requirement. So hope that you can handle your assignment. Don't worry about the exam or with regard to my area, and your assignment, do a good job. I have no hesitant of giving the maximum mark if I feel that you have done a good job. So 20 out of 20 is not a problem, but if you have to convince me that you have done a good job, okay? And there'll be a question from the areas what we discussed more focusedly, give a little bit attention on the today's topic as well. So if you do my 2 areas, you can get a good mark. Okay, clear? So all the best and take care. Follow all the precautionary actions that you have to follow. Go beyond that and be safe. And that's the most important thing. Don't wait till the authorities do everything for you. You have your own format. Follow your own structure, process, and take care, because you'll unfortunately, all of us are exposed directly to the customers. And when the banks are open, customers will even come to update a passbook if they don't have anything to do. So be careful with those type of people, right? So finally, you have to protect you, your families, and your close relations as well. So take care. Okay then, we'll meet after 4 weeks time.
Sir, yes.
Thank you, sir.
Yes.
Sir, in case of that power of attorney taking a loan, we are crediting the power of attorney's account, no?
No, principal's account. You can't credit to the power of attorney's account.
Is that so? We can't credit.
No, because you can't take undue advantage from your authority, no? I'm using principal's details, and if I want a facility, you have to open a account for me. There's nothing to do with the power of attorney. You have to credit separately. You have to assess me and give me a facility. Principal's money, you have to credit into the principal's account, because the principal is your borrower, right? After crediting the money into the principal's account, and if I'm using the same power of attorney to withdraw, it's not your problem. But you can't, at the request of power of attorney or at the request of principal, don't even credit into my power of attorney's account. You credit it to the principal's account. At the request of him, you transfer it to transfer or allow him to withdraw the money. You can't credit it into the agent's account.
Okay, sir. Thank you very much.
Okay. Right then. Thank you.